أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. الحمد لله والصلاة والسلام على رسول الله محمد بن عبد الله وآله وصحبه وسلم تسليما كثيرا. Distinguished participants, ladies and gentlemen, I greet you all with the greeting word of peace. Assalamu alaikum wa rahmatullahi wa barakatuh. Very warm greetings to all the participants. Good morning, or good afternoon, or good evening, depending on your locations. The best thing to start our event today is the recitation of the Noble Quran. Hence, I will invite our dear brother, Sheikh Dirar, to recite some verses from the Noble Quran. Over to you, Sheikh Dirar.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. وإذ قال إبراهيم رب اجعل هذا البلد آمنا واجنبني وبني أن نعبد الأصنام رب إنهن أضللن كثيرا من الناس فمن تبعني فإنه مني ومن عصاني فإنك غفور رحيم. ربنا إني أسكنت من ذريتي بواد غير ذي زرع عند بيتك المحرم ربنا ليقيموا الصلاة فاجعل أفئدة من الناس تهوي إليهم وارزقهم من الثمرات لعلهم يشكرون. ربنا إنك تعلم ما نخفي وما نعلن وما يخفى على الله من شيء في الأرض ولا في السماء. الحمد لله الذي وهب لي على الكبر إسماعيل وإسحاق إن ربي لسميع الدعاء. رب اجعلني مقيم الصلاة ومن ذريتي ربنا وتقبل دعاء. ربنا اغفر لي ولوالدي وللمؤمنين يوم يقوم الحساب. صدق الله العظيم.
ما شاء الله تبارك الله. Jazakallahu khairan, Sheikh Dirar, for this beautiful recitation. May Allah ta'ala reward you abundantly. Distinguished participants, ladies and gentlemen, my name is Ahmed Al-Rifa'i, the head of Sharia Compliance at IIFM. And it gives me immense pleasure to welcome you all today. We thank you for taking time to join us and be with us today. The fact that many of you have willingly taken his or her time or precious time to be with us today serves as a reminder how important the efforts and work of IIFM and other infrastructure institutions such as AIOF, IFSB, etc., are to the industry. The purpose of today's seminar is the launch of the IIFM Annual Sukuk Report, the 11th edition for the year 2021. During the 11-year period, since the publication of the first IIFM Annual Sukuk Report, these reports have become well established as a vital, reliable source of information on the global Sukuk markets. It is established as a reference source for Sukuk awareness that provides accurate and validated data information for the Sukuk markets and Sukuk issuance globally. The role and contribution of the IIFM in facilitating the development and issuance of Sukuk worldwide is not only limited to the publication of its annual Sukuk reports, but also goes beyond that. In 2020 and 2021, consecutively, IIFM has published for the markets 2 Sukuk standard documents, namely Template Sukuk Al-Ijara standard documents and Template Sukuk Al-Mudaraba Tier 1 standard documents, which are used by Islamic institutions at a steady pace according to our recent survey. IIFM is currently exploring a much needed relevant Sukuk structures to be standardized in consultation with the market stakeholders. To date, IIFM has published 16 comprehensive documentation and product confirmation standards, as well as related guidance notes across four key areas, namely liquidity management, Sukuk, Islamic hedging, and trade finance, funded and unfunded transactions. IIFM has recently shown its very much relevance in the development of the industry by working hard, diligently, and fast to help the industry shift smoothly from the LIBOR to RFR by issuing 2 standard documents, namely 1 risk-free rates, RFR restructuring solutions for Murabaha and Al-Ijara. Secondly, bilateral amendment agreements and IBOR fallback definitions booklets for Islamic hedging transactions. In the process of drafting these comprehensive documentation and product confirmation standards, IIFM uses the AOF Sharia standards and other Sharia standards issued by fiqh academies and reputable Sharia bodies across the globe as the basis and fundamental source for any Sharia-related issues. In order to achieve Sharia compliance, harmonization, unification, and universal acceptance of those standard agreements issued by IIFM. Please do visit IIFM website. Inshallah, you will find all these mentioned documents, and they are free of charge. You don't have to pay anything. Distinguished participants, ladies and gentlemen, today, along with the launch of the IIFM Annual Sukuk Reports 11th edition for 2021, we will also be discussing very interesting topics in the company of eminent and reputable experts in the industry. So the discussion will include topics such as the global Sukuk trends in 2021, the growth of Sukuk market in Indonesia, very interesting topic, sustainable goals and evolving Sukuk landscape such as ESG, green Sukuk, etc. Very interesting topic as well. So these interesting topics will be summarized as takeaways by the well-known experts in this blessed industry, my honorable and respected brother and IIFM advisor, Haji Ismail Dadaboy, in his closing remarks, inshallah ta'ala. Distinguished participants, ladies and gentlemen, to make sure we are providing you with good service as best as we can. If you have any question during the presentation of any of the topic, please feel free to type or write them in the question box in your Zoom control panel. We will bring them up and answer them at the end of the presentations. IIFM Annual Sukuk Reports 11th edition for 2021 will be available on IIFM website, as well as today's events will also be available on IIFM's YouTube channel, both after the event, inshallah. Without further ado, let us begin with the functionalities for today. It is a great honor for me and privilege to invite His Excellency, Honorable Mr. Khalid Hamad Al-Hamad, the Chairman of the IIFM Board of Directors, to deliver his welcome and opening address. Over to you, Mr. Chairman.
الشيخ دكتور أحمد فاعل. بسم الله الرحمن الرحيم، والصلاة والسلام على أشرف الأنبياء والمرسلين سيدنا محمد وعلى آله وأصحابه أجمعين. Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. It is my pleasure to welcome you all to this webinar at the issuance of the annual IIFM Sukuk Report 2022. It is the 11th edition of this report. In the last few years, this has become a benchmark report for the Sukuk industry. The IIFM team deserves our appreciation for their diligence and hard work to piece together Sukuk data from around the world. I would also like to thank the central banks and industry players who have been cooperative and contributed a lot for the report of this year as well as prior years. Their contributions and cooperations have been really invaluable and consistent over the years. 2021 was another record year for global Sukuk issuances, with $188 billion of new issuances as compared to $175 billion a year before. A quarter of these Sukuk are international, while the rest are domestic issuances. Although new jurisdictions are continuously coming up, the Sukuk market remains highly concentrated with top 4 countries, amounting to 88.5% of total issuances. With the $77 billion of mostly domestic Sukuk issuances, Malaysia continues to rank number 1, having a 41% market share, while Saudi Arabia accounts for 22%. Indonesia and Turkey, with 12.4% and 9.5% share respectively, are quickly catching up, both being large economies. Over the last few years, we have seen the welcome trend of new markets joining the Sukuk bandwagon. China, Japan, Singapore, Hong Kong, Jordan, Egypt, Ivory Coast, Mali, Morocco, Maldives, South Africa, Senegal, France, Germany, Luxembourg, Kazakhstan, and the list is long. It is no doubt an indication of the long-term growth prospect for Sukuk and for the Islamic finance industry in general. It is reflective of latent demand from a population which until recently was unable to tap this market due to the lack of regulatory permission and related infrastructure. On the other hand, the high concentration of a handful of markets indicates that only a few countries have adequately unlocked the potential of Sukuk as a tool for long or short-term fundraising. In the last 20 years, 12,778 Sukuk were issued globally, worth $1.6 trillion, of which 2/3 were issued by one country, namely Malaysia. But Turkey, Gambia, Indonesia, and Bahrain are the markets with the greatest number of issuances. When it comes to the amount, the regional picture is quite different. In the GCC, the average Sukuk issue is about $390 million, followed by $370 million in Africa, excluding Gambia. In Asia and the Far East, the average issuance size is $110 million. Let me now say a few words about the work that IIFM has been doing in Islamic capital and money market for the last 20 years. IIFM has so far been instrumental in issuing 16 standards for Islamic capital and money markets. Banks and financial institutions in about 16 countries follow these standards, although the adoption is not uniform and varies from market to market. While the adoption of IIFM standards has improved in recent years, it is still short of the desired level. This is true not just for IIFM, but other Islamic standard setting bodies are also facing the same situation. Standardization is critical for rapid and sustained growth of an industry. Islamic finance has become significant in some markets with about 15 to 30% market share, while it is still nascent but growing in other markets. Standardization will provide a further boost to the industry. In this regard, regulators need to encourage adoption and even mandate it where necessary. Thank you, ladies and gentlemen, for your time and attention. I wish you a successful event. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you, Honorable IIFM Chairman, for this important and inspiring, valuable speech. We thank you for that. It is my great pleasure, again, to invite His Excellency Dr. Zamir Iqbal, Vice President, Finance, Chief Financial Officer from Islamic Development Bank, to deliver his keynote address. Over to you, Dr. Saab.
Thank you so much. Bismillah ar-Rahman ar-Rahim. Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullah wa barakatuhu. Very good morning to all those who have joined this very important webinar. I hope you're all keeping well and safe wherever you are around the world. I would like to begin by expressing my sincere thanks to the whole IIFM team for all the hard work and efforts that went into the 11th annual Sukuk report that is being launched here today. And thank you for bringing us together here. It is very nice to see so many familiar faces and friends, and I hope we could meet soon face to face, inshallah. Now, allow me to take this opportunity to share some of my thoughts where we are, look at the Sukuk market and the global challenges which we face today and where we go from here. If you look at the numbers, of course, the Sukuk market is on its way to hit the $1 trillion mark within the next 5 years, inshallah. Such an industry benchmark would further enhance the visibility of Sukuk as an alternate capital market instrument for resource mobilization around the world and encourage more new issuers to tap into this market. This will definitely provide more impetus to regulators around the globe to incorporate Sukuk and its characteristics in their regulatory framework and allow a level playing field to all those who would like to diversify their funding sources through Sukuk. Now, of course, we don't have to wait and should not wait until we hit the $1 trillion mark, and wide-ranging efforts such as those undertaken by IIFM should continue to promote Sukuk through standardized templates and documentation that make transacting in the Sukuk market smooth for all stakeholders, be it the issuers, the regulators, as well as the investors, to drive more activity in this market and raise awareness at the same time. Now, at the Islamic Development Bank, we are committed to this higher goal of creating an enabling environment for Islamic finance through our long-standing technical assistance program. For Sukuk, we do this by assisting our member countries in setting up legal frameworks and regulatory regulations to drive Sukuk activity in the local and regional capital markets. As Sukuk is still a very niche segment, building capacity of financial professionals is another aspect that we focus on by regularly organizing high quality workshops and technical roundtables, some of which are jointly organized with IIFM and its network of experts. These events bring together various stakeholders, such as the practitioners, regulators, as well as the investors, for in-depth deliberation on the best way to tap the potential of Sukuk for better resource mobilization. On the market trend side, we have of course witnessed a dip in the Sukuk issuance since the onset of pandemic, as both issuer and the investors retreated due to global uncertainty and held on whatever liquidity they had until the after effects emerged and response plans were laid out. Now, global Sukuk issuance went down from approximately US dollar 167 billion in 2019 to 148 billion in 2020 and 147 billion in 2021. There are estimates that the issuance will either remain flat this year or might witness a slight increase. Amid the global backdrop of high oil prices and geopolitical crisis between Russia and Ukraine, we could see volumes dipping further in the near future as the appetite for issuers, especially sovereigns, who are the majority of Sukuk shareholders, Sukuk issuers, shrinks due to the flush liquidity. Also, the increasing contractionary measures being taken by the major central banks around the world are driving investors to safe havens rather than towards emerging markets, which are generally high risk, and as a result, demand for Sukuk could further get impacted. Now, speaking of emerging markets, there is where I believe it is an important and not so hidden opportunity for Sukuk to be instrument of choice, which could lead to more volume instead of dipping. By the very nature, green and sustainability are inherently Islamic, and therefore their potential for complementarity is extremely strong. I mentioned this everywhere, and I hope this is widely understood. The green and sustainability strategies that are being formulated and endorsed at the highest levels of the governments, especially in the emerging markets now, are going to be very critical in developing a strong pipeline of investments securitized via Sukuk and offered through both green and sustainability Sukuk. This way, both green and sustainability Sukuk will gain greater significance in ever-expanding funding strategy of issuers, especially the sovereigns. Not to forget the resilience, which is a key criterion that many countries are hardwiring into their post-COVID recovery plans for shock-proofing their economies. This also includes food security, which has re-emerged as a global challenge, mainly due to the geopolitical crisis and the massive efforts required to secure emerging food and agriculture supply and social protection and livelihood support to the most vulnerable populations. This opens up another venue of resilience-linked Sukuk that could drive capital towards the resilience-based projects and make further positive impact on the ground. So, therefore, green, resilient, and sustainable infrastructure will require massive investments, especially in the emerging markets, and such is the feature of asset-based or asset-linked instruments like Sukuk that are flexible enough to adapt to to evolving dynamic emerging market economies, which can boost volume through a thematic approach. This is a type of innovation that will benefit Sukuk market in the long run, as it will attract new investors to participate, especially those who are strongly inclined towards environment, social, and governance like ESG and socially responsible investments or SRI spaces. Now, at the ISDB end, I'm very pleased to share that we have a strong pipeline of green and social projects, including food security, women empowerment, and youth development, which will feature in our resource mobilization plans. Inshallah, that are augmented at a high level by our climate action plan, economic empowerment approach, youth development policy, and fragility and resilience policy, among others. Moving forward, driving economic growth is a very important pillar of our strategy, and this will further expand the pool of thematic assets for Sukuk issuance in the future, inshallah. To support this trajectory at the market level, the Islamic finance industry most definitely needs institutions like IIFM to continue its extensive efforts for standardization of documentation and structures that will enhance the market efficiency and allow more players to embrace Sukuk without any hiccups. As a founding member, the Islamic Development Bank reaffirms its support to the mandate of IIFM and the significant work that is undertaken for the development of the Islamic finance industry. I thank you, all of you, for your kind attention. I congratulate the team once again for the launch of this very important report. Wa alaikum assalam wa rahmatullahi wa barakatuh.
وعليكم السلام ورحمة الله وبركاته. Honorable Dr. Zamil Saab, we thank you very much for this informative and well-taught key note address. We always learn from you, mashallah. We learn from your vast knowledge and expertise, sir, really. And we really appreciate you being with us.
Thank you. Alhamdulillah.
Ladies and gentlemen, now we have what we call special address. For this special address, we have two very important guests who are well known. They are renowned for their valuable contributions to the development of our blessed industry. Number one is Honorable Mr. Nick Muhammad Dean, Director General, Labuan Financial Services Authority, Malaysia. And he is the Vice Chairman of the IIFM Board of Directors. And the second is no any other than Honorable Dr. Bello Lawal Lambata, Secretary General, Islamic Financial Services Board, based in Malaysia. So, ladies and gentlemen, it is a great pleasure to start with my dear brother, Mr. Nick Muhammad, to deliver his special address. Over to you, Vice Chairman.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. His Excellency Mr. Khalid Hamad, Chairman of the IIFM Board, Dr. Bello Lawal Danbata, Secretary General, IFSB, Dr. Zamir Iqbal, Vice President Finance, the IDB, Brother Ijlal Ahmad Alvi, CEO of IIFM, Dr. Ahmad Rufai, Head of Compliance, IIFM, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. A very good morning or good afternoon to all. Alhamdulillah, praise be to Allah the Almighty for His blessing and guidance. We are able to meet here today. I sincerely wish one day in the near future we can meet again with old friends, face to face, physically. I would also like to extend my warm welcome to everyone to this event held in conjunction with the issuance of the IIFM annual publication, the 11th edition of the IIFM Sukuk report. The publication of the IIFM Sukuk report not only shows the commitment by the IIFM workforce to publish a quality and comprehensive report on global Sukuk development, but also the determination to provide continuous support to the Islamic finance industry, predominantly in the global Islamic capital market. I'm grateful to IIFM for the opportunity to deliver this special address for today's event. My remarks will inshallah highlight 3 points relating to global market developments on Sukuk. Firstly, the technological advancement and digital innovation. The increased use of financial technology or fintech promotes more innovation and efficiency by making financial products and services more accessible to investors. From the Islamic capital market perspective, the digital transformation and blockchain application have the potential to scale up the existing mechanism, exploring new market segments and providing better solutions for upholding financial inclusiveness. It also democratizes access to markets by increasing liquidity, reducing costs, and ensuring fairness and security. Besides that, blockchain and smart contracts help to simplify the structure of Sukuk issuance at all its stages, including trading process and settlement period, thus implying digitalization of Sukuk process issuance. As a reflection, Sukuk tokenization represents a major opportunity for the Islamic financial industry. Tokenization makes it possible to materialize and unitize existing assets from the physical world to the digital world. This could lead to new business models and potentially as a new means to raise funds and investment in the near future, especially for the small and medium enterprises. Tokenized assets are similar to investment in Sukuk, where a digital token is created on a blockchain that supports smart contracts to represent interest in the underlying assets, in beneficial ownership, and in constructive possession. Smart contracts also determine how the token can be purchased, traded, and sold in a compliant fashion. And since they are blockchain-based, the transactions are immutable, traceable, and fully transparent. According to Sharia Review Bureau, a Sharia advisor licensed by the Central Bank of Bahrain, tokenization can be structured in a way that is in compliance with the rules of Islamic finance. Secondly, I wish to highlight on one of the biggest trends in the capital market, that is the environmental, social, and governance, or otherwise known as ESG. The growth for sustainable investment focusing on thematic ESG is indeed increasing, moving from the periphery into the mainstream. The ESG-focused Sukuk issuances have demonstrated that by adding a sustainability component to a Sukuk offering, the scope of clientele is broadened. Not only it attracts the conventional and Islamic investors, it can also attract the socially responsible investors who seek to diversify their holdings and meet their investment goals for sustainable finance. With respect to the use of proceeds of an issuance, the ESG is very much aligned to Islamic finance principles in terms of advocating positive values such as social responsibility, shared prosperity, and sustainable growth. Responding to the burgeoning demand for ESG-focused Sukuk, the Securities Commission of Malaysia in June 2022 launched the Sustainable and Responsible Investment Linked SRI-linked Sukuk framework. The framework is an extension of the initiative under the SRI roadmap that was introduced in 2019 to broaden SRI product offerings. More significantly, this initiative is part of the latest SC's Capital Market Master Plan's priority to facilitate transition finance, which supports Malaysia's commitments and aspirations to transition to a low carbon and climate resilient economy. It aims to encourage the issuances of SRI-linked Sukuk by corporates in carbon-intensive industries as they transition to better sustainability practices and low carbon activities. In addition, the Securities Commission of Malaysia announced the expansion of the SRI Sukuk and bond grant scheme that will enable eligible SRI-linked Sukuk issuers to apply to offset up to 90% of the external review costs incurred, subject to a maximum of 300,000 ringgit or $70,000 per issuance. Ladies and gentlemen, my final point for today is on the regulatory landscape, where we see regulatory authorities continuing to support sector development with enabling policies and measures. Aside from the previously mentioned SRI-linked Sukuk framework, let us take a look at some of the major regulatory developments in the Sukuk market. Based on Islamic Finance News analysis in June 2022, the Securities and Exchange Commission of Pakistan and Indonesia's Otoritas Jasa Keuangan are refining their P2P framework, and the Capital Market Authority of Saudi Arabia released the draft regulatory framework for equity crowdfunding. On the ESG side, the capital market regulators of Oman and Morocco convened in March this year to explore ways of collaboration, which included on Islamic green financing. The regulators also held discussions on the economic feasibility of offering green bonds and Sukuk. Meanwhile, the Qatar Financial Center has developed a sustainable Sukuk and bonds framework based on the Markets Association Green Bond Principles, Social Bond Principles, and Sustainable Bond Guidelines. And lastly, the introduction of Sharia Standard 59 relating to the sale of debt by IOFI is one of the most significant events in the Sukuk industry timeline to date. Ladies and gentlemen, over the years, Malaysia has been proactive in developing new regulations that integrate Islamic finance, ESG agenda, and financial innovations together. As an international center, Labuan International Business and Financial Center, or Labuan IBFC, plays a complementary role to the hinterland's agenda on development of Islamic finance in Malaysia. In response to capital market trends, Labuan IBFC has issued the guided notes on issuance of green, social, and sustainability Sukuk, which offers a suitable environment for Sukuk issuance. Labuan IBFC has a comprehensive infrastructure that supports and accords certainty as well as integrity for Sharia-based structures. In 2017, Labuan IBFC licensed its first digital finance-related entity, and since then, the jurisdiction has licensed cryptocurrency platform, fintech funds, digital token issuance, and licensed digital securities exchanges using blockchain technology. Pursuing Labuan's aspiration as Asia's Islamic Digital Asset Center, or IDAC, the Sharia Supervisory Council of Labuan FSA issued a pronouncement in February on the minimum compliance criteria for offering of Labuan Islamic digital-based solution in order to highlight the Sharia permissibility of such offering. Labuan also anticipates to launch the first Sharia-compliant ESG-based digital exchange middle of this month, potentially making it one of the first Islamic digital exchanges in the world. This exchange platform will focus on tokenization of securities, including digital Sukuk, allowing for immediate buying and selling of securities throughout its integrated blockchain technology solution and support from a comprehensive ecosystem. It creates a competitive market environment for Labuan as a fundraising and investment hub in the digital space. On that note, ladies and gentlemen, I wish to end my speech by wishing you a fruitful and engaging webinar ahead. I wish to thank you all for your attention and wish you all wabillahi taufiq wa hidayah wa salamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, Honorable IIFM Vice Chairman, Mr. Nick Muhammad, for this informative, well-taught, useful, and commendable speech. We thank you for that, as always. Now, ladies and gentlemen, it is my great pleasure to invite His Excellency, Honorable Dr. Bello Lawal Ambata, to deliver his special address. Over to you, Doctor.
Bismillahir Rahmanir Rahim. Wassalatu wassalamu ala Sayyidina Muhammadin wa ala alihi wa sahbihi wa sallim. Your Excellencies, Khalid Hamad Al-Hamad, Dr. Zamir Iqbal, and Sheikh Nick Muhammad Din, my brother Ijlal Ahmad Alvi, and Sheikh Ahmad Rafai, distinguished speakers, ladies and gentlemen, Assalamu alaikum wa rahmatullahi ta'ala barakatuh. And a very good day to all of you. If you have already 2 keynote speeches and then 1 special address, sometimes I will wonder what to say after this distinguished gentlemen have said. But the fact that it's called special address, I will try my best to say a few words I think that are not repeated, what they have said. To start with, first of all, I would like to say that let us express our praise and gratitude to Allah subhanahu wa ta'ala by saying Alhamdulillah for all the blessings that He has bestowed upon us. We ask Allah subhanahu wa ta'ala to continue to bless our gathering today and continue to grant us success in our efforts to promote Islamic finance, as this is also part of our effort in pursuing His pleasure by conducting economic activities in accordance with Sharia for the sake of Allah. Secondly, it is indeed my pleasure to virtually attend this event, and I would like to thank IIFM for inviting me on this special occasion, that is the launching of the 11th annual Sukuk report. I believe that this report will bring valuable benefits to the global Islamic financial services industry as a whole, and to the financial markets in particular, by providing an in-depth insights and discussions specifically on Sukuk instrument. On that note, I would like to extend my congratulations to the IIFM for successfully completing the 11th annual Sukuk report and for generously sharing it with the wider stakeholders. It is hoped that this report will enhance our understanding and development of the global financial markets. Hence, I would like to congratulate my brother Ijlal that this achievement is actually witnessed under his leadership. Distinguished ladies and gentlemen, as you may be aware, the IFSB as an international organization is promoting the stability and resilience of the global Islamic financial service industry by developing quality research and issuing prudential standards, as well as facilitating the implementation of their standards. IFSB has recently published its annual flagship publication called the Islamic Financial Services Industry Stability Report 2022, which we launched on the 15th of August in Nigeria, launched by His Excellency, the Governor of the Central Bank of Nigeria, Governor Emefiele, who is the Deputy Chairman of the IFSB Council 2022, on his behalf by Dr. Kinsley, the Deputy Governor. It was also witnessed by the ISDB Vice President, Dr. Mansur Mukhtar, and the other top dignitaries that are in the global Islamic financial services industry. Why I mention this is because we have an experience of issuing such kind of reports, and I must commend the effort of IIFM for consistently at the 11th year issuing this report. The IFSB Stability Report is launched as part of the IFSB's mandate to promote and enhance stability and resilience of the Islamic financial service industry. And I'm pleased to say that it has been 10 years since we also first published this report in 2013. It is a decade of consistency which demonstrates our commitment in advancing inclusive development of the Islamic financial services industry, its prudence, and in a sustainable manner. Hence, maintaining and enhancing the resilience and stability and standardization of the world, while the Islamic financial system, which is consistently being issued by IFM, deserve high. In a global economic environment with advancement of information technology as highlighted by preceding speakers and increasing interdependencies, strengthening global cooperation among international standard-setting bodies is really paramount. Industry players, regulators, as well as education and research institutions are becoming more and more critical to mitigate risk and sustain financial stability post and amid the pandemic. Hence, it is with great pleasure for me to attend this webinar today and to witness such collaborations in which we will be benefiting from words of wisdom and knowledge and insight from the speakers today. Distinguished ladies and gentlemen, as the main mandate of the IFM is to develop the global financial markets, especially the Sukuk market, IFSB also has a strong concern and focus to maintain the stability and robustness of the Islamic financial service industry by having a robust performance and contribution to the Sukuk market in the economy. As such, that's why the collaboration between the IFM and the IFSB has been getting stronger and stronger and being strengthened as we intend to serve the same purpose for the industry. As the IFM ensures and assists the Islamic financial market instruments, documentation, trading volumes, and issuances, as well as performances, the IFSB also play a role in ensuring the Sukuk market as one of the market catalysts and drivers to increase the roles of Islamic finance for the other two sectors, particularly Takaful and Islamic banking. Similar to the positive trend of the Sukuk market as reported in the IIFM Sukuk Report 2022, the IFSB Stability Report 2022 also reveals the sustained and positive growth of the global Islamic financial services industry in terms of assets, in which 11.3% year-on-year growth was witnessed, and with an estimated value of $3.6 trillion despite the challenges posed by the prolonged COVID-19 pandemic. The ICM sector constitutes around 30.5% of the total Islamic financial services industry, and it is a wide range of variety of instruments that has been initiated during the pandemic. A wide range of COVID-19 policy measures also were undertaken by regulatory and supervisory authorities, has proven to be effective in handling the health-induced crisis throughout the year 2020 to 2021 and to the dates that we are. These measures subsequently resulted in general favorable economic condition in most of the IFSB member jurisdictions as we witnessed, even though the economic recovery momentum remained uneven, particularly between developed and emerging economies. As highlighted by the preceding speeches and as indicated in the IIFM Sukuk report, the Islamic financial market has witnessed a tremendous growth, particularly in corporate Sukuk issuances, and the reason for this positive trend in corporate issuances lie on several factors. First, the timing related, because the timing now, many countries are now looking for alternative ways to raise funding to fund their economic recovery plans. And other reasons includes the issue of improved Sukuk market infrastructure, including incentives provided by some jurisdictions, and as well as the low interest rate regime, as well as higher funding needs for private sectors during the pandemic. Of course, the continuous commitment and engagement between the industry and the IIFM standardization, documentation and standards has also facilitated this development. Regardless of this growing trend, some challenges in issuing corporate Sukuk particularly remain among a greater challenge among other member jurisdictions, particularly in IFSB member jurisdictions as we witness. This include higher cost of Sukuk issuances, the smaller size of the corporate issuances, the complexity of this Sukuk structure compared to corporate bonds, and the high reliance on money market rather than capital market as a source of funding in predominant jurisdictions. I believe the report also concludes that based on its observation, corporate Sukuk issuance tend to be higher in the environments where comprehensive Sukuk markets infrastructure are provided, including those that are committed and demonstrated by particularly a number of regulatory and supervisory authorities. Ladies and gentlemen, in addition to the findings and assessment of the IIFM Sukuk report, there is an issue of climate change, and a considerable number of international organizations, global leaders, as well as regulatory and supervisory authorities has been responding to the climate change issues through various measures with the mutual goal to reduce greenhouse gases emissions. Among them, a notable one was the Paris Agreement, in which 197 countries were involved and pledged to legally binding commitment towards climate change objectives. The treaty entails a long strategies targeted at limiting global warming between 2 degrees and preferably to 1.5 degrees Celsius compared to the pre-industrial levels that we have before this agreement. This commitment was reiterated by the world leaders and representatives from among 200 countries during the COP26 that was held in Glasgow on the 31st October in the United Kingdom. That is November last year. The United Nations Human Rights Council as well on the 8th of October last year has strengthened the importance of addressing climate change issues by declaring that access to clean and healthy environment is considered as fundamental human rights. Hence, this gives the opportunity for accelerated development in the Islamic capital market, particularly the issuances of socially responsible instruments. These principles of environmental, sustainable, and governance are becoming trended in finance and are aligned with the Islamic principles and objectives set out in the concept of Maqasid al-Sharia. Therefore, the Islamic financial service industry has tremendous opportunities to meet the expanding needs in this segment. As Islamic finance principles are substantially synergize with the global sustainability agenda. As the term ESG, sustainable and responsible investments, SRI, and impact investing are gaining popularity, there have been efforts in Islamic finance industry to counter this trend. That is the issuance of global green Sukuk, sustainability Sukuk, SRI Sukuk, among others, as we just heard from His Excellency Dr. Zamir Iqbal, the efforts and the issuance that has been done by the Islamic Development Banking Group. The presence of sustainable driven Islamic financial instrument along with the reg space by the Islamic financial service industry requires the attention of the regulatory and supervisory authorities to ensure proper guidance is in place for the Islamic financial institutions while incorporating the new climate-related risks into the risk management framework for the purpose of maintaining overall financial stability and resilience. International standard-setting bodies or organizations such as the IISB, that is the International Sustainability Standard Board that is just newly formulated, the Financial Stability Board, and the International Organizational Securities Commission have responded to climate-related and sustainability issues by issuing a number of documents, including the preparation of standards for sustainability related disclosures, which has just been issued in July last month, I can say, or a few months ago. In response to this, particularly in Islamic capital market sector, IFSB has commenced the development of a guidance note on sustainability-related issues and disclosures in the Islamic capital market in early 2022, which currently the standard is ongoing. And we are pleased to announce that our continuous commitment to collaborate with IIFM in many fronts when it comes to not only the documentation, but the standardization of guidance for the global Islamic financial industry. Distinguished participants, before I conclude in my address, I would like to echo the statement made by the World Health Organization recently, that it is too early for policymakers to declare that COVID-19 crisis is over. Hence, it is important for us as Islamic finance industry stakeholders to explore how we can provide the global solution in addressing the potential challenges and the continuous challenges that is posed by the pandemic. It is true that the world is now on the recovery phase. However, we should not become complacent and remain cautious. We should be remaining cautious to leave no room for another COVID-19 crisis to emerge without a proper strategies in place. In the way forward, aside from the climate change, we may also face challenges from the rise of inflation globally, the geopolitical uncertainty between Russia and Ukraine, and energy crisis that we are witnessing around the globe. Therefore, I do hope that this webinar and the 11th annual Sukuk report issued by the IIFM will equip us with more tools to move forward. I conclude by once again congratulating the IIFM and my brother Ijlal for his sound leadership of the IIFM and consistency in issuing the 11th annual Sukuk report. And I wish us a fruitful discussion in today's webinar, and I look forward to constructive outcome of this engagement. Wassalamu alaikum wa rahmatullahi wa barakatuh, and thank you all for your time and listening.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you, my dear brother, Dr. Bello, for these very insightful and useful words for the Islamic finance industry and its future aspirations. We thank you for that and the advice for us to be very careful from the COVID-19. It is not yet over, really. I agree with you. So now, before I turn the time over to my dear brother, Honorable Mr. Ijlal Ahmed Alvi, the IIFM CEO, to announce the launch of the Sukuk Report 11th edition 2021, and to present the key highlights of the reports, I would like to take and seize this opportunity, because I can see my brother there, to congratulate my dear honorable brother, Dr. Umar Husseini, CEO of ILM, for his new role as Mufti in his region back in Nigeria. May Allah Ta'ala bless him and help him to carry this huge responsibility. May Allah bless you, and congratulations deeply from my heart, my brother. So now it's over to you, Honorable Mr. Ijlal. to announce the launch of the Sukuk reports. Jazakumullahu khairan.
Sheikh Ahmed. Bismillahirrahmanirrahim. Assalatu wassalam ala nabiyyina Muhammad wa ala alihi wa sahbihi ajma'in. Distinguished Excellencies, Brother Khalid, Brother Bello, Dr. Zamir, Brother Nick, Brother Umar, and all of you who are attending and fellow speakers. Assalamu alaikum wa rahmatullahi wa barakatuhu, and very good morning or afternoon or approaching evening. And indeed, it's a pleasure to welcome you all here. It's an honor to welcome all the speakers and panelists and all the attendees from various jurisdictions. And like mentioned, inshallah, I hope that we will be able to also, inshallah, meet in person also in near future. I sincerely hope that that something is overdue, and inshallah will do. I'm really thankful for all the support, and also what Dr. Bello also mentioned. The key is really for infrastructure institutions or strength setting organization in particular. Is really working, in collaboration and with all the support. I think that is one of the key element in our industry. What I have seen over a number of years now, that this is the key to take our industry forward, to develop it in a sound footing, in a robust manner. And as we go along, we clarify certain things, we develop certain guidelines, we develop certain standards, and at the same time. There are sort of, I will briefly mention, on the legal side also, there have been progress, which is very important, especially when it comes to Sukuk issuances. There are various issuers involved, which are there, as we know. And from the standard, you can see which are the parties involved. So I saw one question there, but that's, I will leave it, certain broader for the later, inshallah. I would like to now, announce the launch of IIFM Sukuk report, and if you allow me, I will just make a small presentation on that. So I will just give me 1 minute. I will request my team to do that, and inshallah, we will soon, inshallah, do that. So here we are now, and if you look at it, and if you see the total sort of issuances which are there, so like 2020, we have 2021 is a growth year in Sukuk issuances, and I think one of the key sort of element which one has to note in terms of the Sukuk issuances that till 2021 we have seen very sort of benchmark rates, which generally used in the Sukuk market also, are being pretty low. And now, since 2021, I think late we have seen now there is a global change in terms of how the monetary policies are run and how the rising inflation. COVID-19 generally, alhamdulillah, didn't really affect the Sukuk issuance in general. But what we have seen is that yes, in terms of overall, it did sort of impact in many ways how we operate, and that's something we noted. But generally, I will just go over some of the points which in the Sukuk market what we have seen over the years, and 2020 had been again 21 has been a record year. And what we see, because we are not really giving projection as per procedure, because the data what we verify takes time, and it's various jurisdictions. Without going in details, which you'll see in the report, which helped us really to put together the data. It takes time, but what we have seen, in 22 also, at least 6 months has been reasonably good. And as mentioned by Dr. Zamir also, that the later part could see Sukuk issuances. They could be flat. In my humble opinion, how I see at the moment, what we see the issuances, pipeline, what has been issued. Of course, the interest is always there, so there is no dearth of that, which is always helpful in Sukuk market. So this is generally, you can see the rising trend. One sort of, I was talking to my team that this red is not really something which is the flagging anything problematic for Sukuk. This basically was, and I don't want to go into details, we have covered it previously also, that was due to strategic decisions for the short-term Sukuk issuances by the key jurisdiction. So it's nothing to do with the Sukuk market in general or anything to do. So since then it's recovered also. And Sukuk short-term market, as I will briefly mention, work differently in many ways. It's more for the liquidity management. While we look at the long-term market for various, which I will briefly mention, the main issuers and what their sort of key objective in the issuances is. So this is something which we have seen. We have seen like 2020. We are now mentioning Sukuk market started in 2001, and then it moved on. And most of the issues which were issued during the 2001 up to 2009 period were issued on mostly 5-year or 10-year basis. So it was not really very long term, and most of them, as per our data, what it tells us that those have really matured. So we have not really sort of taken those now years, we have dropped it so that keep our sort of the chart also manageable. But overall, we have seen the Sukuk issuances of 1.6 million since the market started. So this is the overall issuances, and as I said, some of them have matured. We have also seen now in terms of Sukuk issuances that there is a trend, which is a very healthy trend, is the Sukuk has now issued up to 30 years, and even in some cases, especially for Malaysia, we noticed the last year was up to 50 years Sukuk tenure. So this is really something very helpful and healthy in terms of Sukuk, that now the markets have moved internationally also from 15 to years. Domestically, you can see even from Indonesia 30 years or longer tenor. So the tenor has also, as from the previous years, when initial years, if I may say, has also gone into longer tenor, which is what we need really in terms of, and I'm sure Brother Umar or Dr. Umar will inshallah mention about how the yield curve and all. I think he'll briefly mention in the session, so I should not go into that. Next slide, please. So this is our sort of looking at international Sukuk. Again, for what we mean by international Sukuk and all, these are hard currencies, and you have to refer to the glossary. So I'm not going to go into those details. But this is one of the key sort of things on the global level when we talk about, this is something which we say that there is a domestic market and there is market. Of course, there are issuers from various domestic hub institutions, jurisdictions, as we know, and then they issue international Sukuk in various hard currencies. So we have seen, growing sort of trend in this, segment. We sort of have seen in 2007, 2008 financial crisis. There were some Sukuk who had to be restructured, and I think there were few, maybe very few, which had to be sort of gone into longer liquidation or litigation. But generally, Sukuk market, we have that experience how it can be restructured, and it has been, alhamdulillah, has not faced any difficulty. So we have, you see, sort of starting 2010 after financial crisis, Sukuk market is sort of growing, in some way, the international market also. And last year, we had again a healthy sort of increase of 16%, or 49 billion. Of course, we sort of cannot compare ourselves with the conventional market, which is much bigger and there for a long time, various reasons. So we have to be very positive about this, that there is a progress positive, and we see a good potential as we see now issuance of green segment is coming in, ESG is coming in, sustainable finance is coming in, social responsibility related also issuances are coming in. So there are various sort of issuances which are playing in the Sukuk market. And we have seen the total issuances since the inception, like I mentioned, we dropped about 9 years, is around 382 billion, which has been issued for international Sukuk issuances. And some of them, as I mentioned, have gone into a longer tenure also here. We have seen up to 15 years or 30 years international Sukuk now becoming quite common, which is again, in my view, a healthy thing. Next slide, please. Looking at sort of longer term versus short term Sukuk issuances in the international market. So you can see that, again, that we have seen, some adjustment in 2015, which was a strategic decision. So there is nothing wrong with that. And then we have seen how the ratio sort of has been. And at the international level, you can see we have shown, some figure or about 4 times. There is no figure you can see till 2012 for international short-term Sukuk. Reason being that, at that time, previously, Bahrain started as a pioneer in the short-term market in 2001. And as I understand, they discontinued that in 2006, although they issue domestic short-term Sukuk, both on Ijara and Salam basis. But those are sort of now in the domestic currencies rather than, dollar or hard currency. So we didn't see any sort of issuances in the short-term market till 2012. And then you have ILM, which started in 2013. And that point, as I mentioned, will be covered. And now we have a sort of around 70+% long-term Sukuk internationally, and ILM mostly is the one which is issuing the dollar or other hard currency issuances, which they will plan out, inshallah. Next slide, please. This is your sort of looking at your domestic market and how that have evolved. Of course, in domestic market we have established jurisdictions. Some of you must be aware of that, but there are jurisdictions like which are well established, like Malaysia, Indonesia, Turkey. We have now also we have GCC, and we have several other African countries are also now coming as a key sort of jurisdiction, and they are sort of moving towards major hub jurisdictions. And we have sort of seen how in the domestic level it drives the sort of. So one element which was there was the international market, how it is there, and I will mention who are the main issuers, so key 3-4 issuers. But you can see how domestically it plays a role in development. Your sort of mention about the infrastructure, your regulatory side, oversight, and how it will perform, what to be done structurally. Of course, we will cover a little bit on issue of Sukuk, which was again clarified in the financial crisis times in 2007-8 about the explicit sort of nature of guarantees by the sovereigns in Sukuk issuances or explicit. So that issue was also clarified. So for the investor, especially, the sort of transparency is very important, which of course standard does provide that also play a role in that. And we have seen the domestic market progress. Again, I mean, this flag is not something to do with any trouble with Sukuk market. It's simply strategic planning, and which we'll see, how the short-term market domestically has grown. And we have seen now domestically issuances of about 1.2 trillion since inception in 2001. Next slide, please. Now you can see in this slide domestic level long-term and short-term Sukuk issuances, and you can see how sort of they have played a role. And the percentage-wise, last year it was 71% long-term, and then they were short-term again have gone up after a strategic decision, and they have moved towards more liquidity management, which is generally the case. The short-term Sukuk are issued for that purpose. Some jurisdiction may bring in as investment purposes also, but generally short-term market is for liquidity management, what we have seen. And we have seen continued progress in the long-term Sukuk market, which you can see and how it is sort of coming through. Next slide, please. Now, this is your global short-term market. When I say global, it includes your both domestic and your international markets. So that is the combination of the two. And you can see, the progress. If it's, again, we take it from 2015. Earlier, it would be more sort of short-term Sukuk issuances, and then again, progress we can see. And it is again reached 50 plus level, 57 billion, which was issued, and total short term around 556 billion since inception. And we have seen a fairly stable market of short term Sukuk issuances, domestic level. And domestic sort of the main countries which we have seen is, of course, Bahrain is there, Brunei is there, Malaysia is there, Indonesia, I understand, has started now. Also, we have certain countries which do. Turkey, we have seen also some short-term Sukuk is there also, more from the FI or corporate side, they do some short-term there as also. So there was, still a very stable short-term issuances of 54 billion, slight drop, but that's happened. Sometime issuer may move to a longer tenor in some cases, or maybe, supply and demand in various jurisdictions. So it's not something, a drop which we see, a major concern. We have, 54 billion of short-term issuances, and that is helping, especially issuances in the domestic market and providing level playing field in various jurisdictions where Islamic industry is growing, like Dr. Bello mentioned about the size of the industry, which is increasing. So this helps basically in terms of growing your domestic markets, which are very important. Can I go to the next slide, please? This is your international Sukuk. So I will very quickly skip this slide because I know Dr. Umar will be covering this part. So starting 2013, you can go back 1 second, please. So starting 2013, you can see that international Sukuk, and it is it's ILM, which is doing it. So that he will cover that. So and before that, I mentioned about what was the case initially when Sukuk started. Next slide, please. And this is your domestic Sukuk issuances, which previously in 20 up to 15 was more Malaysian domestic. Now Malaysian itself has also short-term has increased, but other sort of jurisdiction, like I mentioned, are also either joined or they are there, which has been issuing. So we have seen the steady rise in short-term, domestic short-term Sukuk issuances of 43 billion for 2020 and 40 billion in 21. Again, this depends on your requirements, and also there is a slight drop, which is, in my humble opinion, is not something of concern. We have seen the domestic short-term Sukuk issuances of 476 billion since inception. So that size is also increasing, which is a good sign. Next slide, please. global sovereign sukuk issuances. And previously in 2010, we used to generally say that sovereign has to take a greater role. And what we have seen that they have taken the role, greater role, and it continued. So, and as you will see, some segment like corporate in particular, what we require from them. But we have seen very sort of 2010 how the progress is in terms of sovereign issuers. Again, that dip is, I can just keep on repeating, but it's more on the adjustment on the short-term sukuk. So it's nothing to do in terms of your market, but it's come how, sometimes you have to adjust. And if one jurisdiction, which is like Malaysia, although their share now is great, but it is decreasing, and other jurisdictions are joining now, alhamdulillah, and playing. So, but if some adjustment comes, which is very much required in terms of sukuk market for how those are issued in terms of what sort of segment they are sort of going to target, or investor segment, what role, whether they will be for sort of liquidity management or QLA, HQLA purposes. So these are all sort of segment which we see. And we have seen now in 2021, alhamdulillah, a rise of 24%. So it's 110 billion global sovereign sukuk issuances, which has been issued. And we have seen now, like I mentioned previously, longer dated sukuk issuances, which is one of the key elements. We have seen jurisdictions like Indonesia, Malaysia, GCC, now we have seen even Nigeria, and some other jurisdiction which I may have at the moment didn't mention, is basically a key role. And they're issuing, sukuk issuances for infrastructure. We have seen also, which is a good sign. And we have seen in terms of sukuk issuances for driving the ESG, focus, which is the key element, and which is one of the areas for IFM also to inshallah look at it as we go along. How can we help? But that is something, a different topic. But we are sort of in an assessment stage, and that one inshallah to see, what sort of eventually we'll be able to do. So this is something we have seen in the sovereign sukuk issuances, and it is around 880 billion since issuances have been done. Like I mentioned, some of them may have matured in the initial period, but it is continuing, as we'll see now towards the end, the total outstanding. Next slide, please. This is your quasi sovereign, or they say sometimes supranational, but quasi generally could be, and I mentioned initially, explicit and implicit government guarantees. So sometimes there was a confusion initially in the financial crisis, but those are all over. So it is very clear now for investors what type of sukuk. And what we have seen in the sukuk, and generally it's not really for quasi sovereign in particular, but I just want to sort of mention about the issue of asset-backed sukuk and asset-based sukuk. So what we have seen, of course, there is underlying requirement for sukuk issuances. There is sort of certain ratio has to be mentioned also, as mentioned in AOF Standard 59. And so these are sort of things which you have to, in general, when you're looking at it, sukuk market, there are two different segments. So at the moment, what we have is, of course, asset-based, which is generally the case, but are sort of rules there and Sharia reasoning. And then you have a segment which I hope can also grow. It will be the asset-backed. But this is just, I'm mentioning just as a point. It's nothing to do with your quasi-sovereign. And we have seen quasi-sovereign issuers are basically for power project also. We have seen in some cases which are done. We have seen certain road network also, which quasi has played a role. We have seen for let's say if it is from GCC, could be oil related issuances also by quasi sovereign. So there are sort of various sort of areas which quasi are active, and it has been sort of one of the I would say good sort of a segment of sukuk issuances. It's not really like what we have seen in the sovereign the case, but their issuance has been fairly in the range of 30 billion or slightly less than 30 billion, as we have seen last year. So this is 248 billion total quasi-sovereign issuances, which has issued till date. The next slide, please. And this is your sort of a corporate slide. And that's where we see, corporate, when we talk about, is generally also what matters is also your economic conditions also, both global and your domestic level, how, especially the rating, of course, in all cases is important. But it domestically could be, domestic level rating or then internationally. But that's sort of a segment itself, apart from Malaysia, which is a deep market. We have seen, of course, issuances regularly from GCC. Some I've seen also not from Indonesia, some other jurisdictions, they do. But this overall potential, I think, for corporate is something for us to look at and to see how sort of corporate segment we can develop further. This can take the Sukuk market from the current level to, inshallah, new highs. And I know this has been sort of attempts have been made in various jurisdictions to bring in the corporate side to it. And this is, I think, one of the key elements. So it has fairly sort of a stable issuances, and they have not really crossed even 30 billion as yet. Last year, as we mentioned, there were sort of COVID-related sort of challenges, in the market, but it doesn't really impact it that much. So we didn't see any sort of a major issue apart from one or two issues which were more industry-driven. Certain industry were hit harder, let's say airline or some other. But generally, we have seen, there's been sort of fairly stable Sukuk, market generally, what has been issued and what is issued. And it had a slight increase, or 15% increase, although the number is lower than what we sort of hope for. And inshallah, our expectation is this segment will grow. So it's closed 345 billion overall since inception. Next slide, please. In terms of the FI, they have been there since the market started. And previously, the FIs used to issue Sukuk, and the investors were generally, when the Sukuk market started, the investor base has increased also now. So previously, the investors were generally, banks themselves. And if they were issuing, banks were, and they were generally more on the investor side. And it was more on the, let's say, LIBOR based. And that's another sort of a subject which I'd just like to very briefly mention. When it comes to global benchmark rate reforms, what we have seen that, and IIFM has issued, one documentation, smaller side on the hedging segment, and also solutions for implementation of risk-free rate or an alternative benchmark, global benchmark rates. In the Sukuk, as per our consultation, it doesn't really sort of affect those the global LIBOR or IBOR, if you call them, or now the risk-free rate. Because Sukuk, generally the benchmark is used either domestic benchmark rate, or it could be your, mid-swap and other sort of available, which, and simply using of a benchmark, if you swear standard, it's not really an issue. So if you refer to our solutions standard on regarding the Murabah and Ijara in particular, you'll notice the use of benchmark is not an issue. Of course, we don't bring in other elements like sort of, for example, compounding and all, which is not the subject here. But I'm just mentioning because FI tend to be more issuing on that basis. And we have seen now, a steady increase since 2017, if I may say, to peak in 2020, and then 24.5 billion, in 2021. Although there is a drop, but what is a good thing is that we have seen now the issuances covering tier 1 generally, which is perpetual mudaraba. And these are issued also on the basis of no undertaking. So previously, there was, without going into much detail, there was an issue in the mudaraba, use of undertaking and certain basis for that. But then, generally, when we look at overall, in terms of Sharia ruling, these are now tier 1 are issued on mudaraba basis, what we have seen generally, and they are issued for without any undertaking there, and they are may have some call option, but generally it is issued on perpetual basis, so there is no as such maturity there, and that's it's a segment which has grown itself. And then you have tier 2 also, which are issued, which could be using muraba structure depending upon the requirement. So this is what the picture for FI issuance is, what we have seen, and what sort of meets the requirement of it's more concern for IFSB as they sort of look at it from Basel point of view. Also, the tier 1 and tier 2 are important sort of element, and we have seen continued issuance of that. Of course, it depends on supply and demand side of it, and that is and also it's something which your own requirement of institutions. So you may have seen a drop there, but it is something I think more in terms of the requirement for how the issuers whether they have a need and all, and your overall sort of economic environment also in some extent plays a role. So we had about 138 billion of FI Sukuk issuances. Next slide, please. Very quickly, this is your country-wise breakup. I understand that my sort of next session time would be starting now, so I will inshallah wrap up quickly. And you can see that we have initially the global short-term market is Malaysia, of course, is the higher share. You can see a major share, I would say 78%. And then you have Brunei, all the smaller in terms of its GDP and all, and it's a very important country. It has 2.5% share. And then you have Bahrain also, which is regular issuers, like I mentioned, about 4% overall issuers. And then you have some other countries. And Sudan also, from the beginning, have been issuing Sukuk issuances. So of late, they may be less issuances, but they are very regular issuance in short-term market, also in the domestic market. And Turkey also, of late, have issued domestic short-term Sukuk issuances by FIs, and maybe the structure they have could be, behind it could be a corporate also. Next slide, please. This is your global Sukuk issuances, and you can see various countries. So I don't have to really what countries which we see now are emerging. Of course, Bangladesh share is increasing now, which is they're issuing more. We have seen also Pakistan issuing also in some cases. We have seen, of course, Indonesia increasing, and then we have other countries, and then we have in the GCC, of course, Saudi Arabia, UAE. Qatar, Kuwait, all are, Bahrain, of course, are regular issuer of Sukuk, including some new jurisdictions which are joining, like Jordan or Yemen. Next slide, please. And this one is a continuation. So you can see the Africa region now, Egypt, sort of a related new entrant. So it's entered. You have, like mentioned, Gambia, Ivory Coast, Nigeria is now we see more issuances at the global level, and more on the long term. We have seen now more infrastructure related. Then, of course, there are other jurisdictions which I mentioned there. And Sudan also, like I mentioned, are there for a long time. And then we have Europe and other countries. We have seen, of course, Turkey is the main entity. UK government itself has issued Sukuk. When we talk about USA, it is US entity. So it could, sometime we have to be mindful that it's not maybe jurisdiction, but the entity, from where. So it is basically referring to that in some cases. France could be that the entity itself, the issuer is a French company. So this is what, one clarification which will be helpful, inshallah, for you. Next slide, please. Again, this is your sort of regional breakup, what we see for the period starting 2001-2021, and international Sukuk issuances. So naturally, international, your percentages are different. So I don't have to, I think, go into this detail. Inshallah, these will be clear to you. If we go to the, yes, 4 or 5 minutes more. So my team is saying that. So others are waiting, inshallah, and the panel. So I don't want to take much longer. Next slide, please. And this is your domestic market. So again, you can see, how, share of Malaysia is still dominating, but again, others are emerging like Indonesia and also certain GCC countries, driven by Saudi, bigger economy, and of course, Bahrain and other, they play the role. Next slide, please. And this is your Africa, which is good to see, Africa region becoming active. Like I mentioned, Nigeria is a major, jurisdiction. We have seen Egypt now coming in. Till now, there is no sovereign, but they have, some corporate issuances from there, which I think is a good sign. And I'm sure, inshallah, sovereign level also we'll see. And of course, Turkey, I mentioned earlier. Next slide, please. So next slide. So global short-term Sukuk, I'll very quickly sort of given the time, and all of you, inshallah, listening, so I don't want to, take too much time, and you can, inshallah, read in the report. But what you can see, what the structure sort of short-term, what are used. So we can see, of course, Mudarba is used, but it's 30%. Then we have global, so it includes both your domestic and international. So you have still Murahaba is there with issues, but you can see the difference, in percentage. Then you have Wakala also, which is plays a role, and then you have some hybrid structures. So this is Ijara, of course, is there, and Ijara is one of the structure which initially Sukuk market started, and then as we see, these other sort of structures have emerged as the Sukuk market evolved and developed. Next slide, please. And you can see differences in terms of the preference in Sukuk structures. So it depends, for internationally, what sort of would be the preference of issuer. And also, I think it depends on the investor base also. That is also one element. And you can see how, we are mentioning about year 2021, but if you see, the report, there are previous years as mentioned. Two board, I think we have seen, segment or breakdown, is that we have seen now Wakala is internationally most sort of highly used structure. And then we have seen in terms of Ijara, Muraba hybrid structures appearing. Pure, Ijara is less now in terms of international Sukuk issuances. And that's also sort of, tell us that in terms of, availability of assets and all and challenges, and we have to keep our industry growing on the right footing. So this is something one has to keep in mind. Next slide, please. And this is your domestic. So domestic, you can see, a slightly different picture. And again, this is something for you to note for benefit of time. I will just, say that in domestic level, you may have a higher percentage of Muraba, but it could be that, certain, issuances like short term we have seen for domestic level because of the credit intensiveness, mainly another reason. It could be, Muraba share is you see higher, but that is because of the requirement and all and how it works. So we have seen, slightly different preference for you to compare when you are looking at to either issue or you want to invest or the other reasons, what you are going to use this report, inshallah. Next slide, please. And this, we are reaching now our final sort of point. Alhamdulillah, over the year, we have seen outstanding is increasing. So the gap between the supply and demand and the secondary market, and I think Dr. Umar will mention something about their secondary market, which is one smaller short-term market. But we have seen now, the previous buy and hold is changing, although still, I think there more could be in some cases both buy and side market, but it is changing with more issuances, more jurisdiction joining, and we have seen 732 billion. And domestic level also, we have seen the rise of 30%, which is a good ride, and 550 billion domestic outstanding. So, next slide, please. And this is your sort of international. So the whole composition is 732. So your 550 odd is your domestic, and then international is 183 billion. So this is what we've seen. We have seen increase. Last year also was less, but this year increase of outstanding to 33 billion. And like I mentioned, in some cases the tenor is gone longer, which is a good sign. So next slide, please. And these are some of the points which I have I'm putting it just for you to note, and these will be covered in the next session. So I'm not going to go in these points for benefit of time. I will just, the session, I know in our coordination, they have noted these points, and inshallah, these points will be covered there. And one thing we also has to, mention, you will see the maturities of Sukuk for 2022 and 2023 and 2024. 3 years we give, and you can see, higher maturities for 23 and 24 based on the higher issuances in the last few years. So that is also, we have given the indication how, the issuances would, maturities would be, and we have seen, alhamdulillah, the reissuances or new Sukuk issuances, so it is growing. So generally for 2022, what I see it at the moment, without, backing off our data verification process, I should not comment, but it looks like a stable market to maybe slightly less, depend, like Dr. Bello also referred to that, how the economic is changing a little bit, and some countries may not have need for issuances also, and the rate of benchmark in some cases rising. So, but all is positive for Sukuk. Thank you for listening. I'm really grateful to all of you, and thank you for, giving me more time, and I have taken slightly more time. So thank you for the next, session, speakers, for, allowing me to continue for a little longer. Very, very thankful to all of you. Jazakallah khair. Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, Mr. Ijlal. I allow you because you are my boss. Otherwise, I will not. Actually, I am really. Thank you very much.
So there is no boss here. So we are all, mashallah, there. And we have our board member also. So we are all part of some one team. So inshallah, we all contribute, and we all try our best to help our industry grow, and all of you are there to.
Yeah, inshallah. I maybe some is well taught, mashallah, key highlights, presentation by Mr. Ijlal. And I think maybe some participants may have some questions. If you do, please feel free to write it as we explained earlier. So I'm not sure we're supposed to have 5 minutes break due to my boss taking too much of his time. Shall we just proceed, Mudir?
Sheikh, I think we can proceed since it's virtual. So,
inshallah.
And, so it's better to proceed. We don't want to wait our, next session panelists and all, and like them, and also see how it is. So,
okay. Especially these excited, awaited, topics, and people really are keen to.
I know we
ask questions. And
some speakers.
Inshallah, we will start the global Sukuk market trends in 2021, and the moderator will be my dear brother, mashallah, Mr. Mustafa Adil. So, since we don't have much time, I will, pass it to Mr. Mustafa to introduce the speakers. Over to you, Mr. Mustafa.
Thank you very much, Dr. Ahmed. Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alameen. Wa salatu wa salam ala Sayyidina wa Nabiyyina Muhammad wa ala alihi wa sahbihi ajma'in. Distinguished guests, ladies and gentlemen, Assalamu alaikum and good afternoon. It gives me great pleasure to be with you here today to start the first panel of this webinar to talk about the mega trends in the Sukuk market that have taken place in 2021. I would like to begin, first of all, by congratulating IIFM on the launch of the 11th edition of their Sukuk report. And as you have just seen, it is a very, very comprehensive study that helps us to get beyond the headlines and really understand what is making up the Sukuk market and how the Sukuk market is behaving in different segments, whether it's the domestic market, international market, sovereign issuances, corporate issuances, and so on. And I would, give my full congratulations to IIFM on this great achievement yet again. Our panel will be a very interesting one, where we will have the benefit of listening to the perspectives of different operators in the market, coming from different markets, and sharing their experience, their perspective, their understanding, not only on 2021 and reflecting on a fantastic year that we had in terms of record issuances, but also looking ahead, looking at the uncertainty that we see today in 2022, and also forecasting for the future how they see the Sukuk market evolve. And for that, we have an extremely distinguished panel of speakers. We have Dr. Omar Hosseini, who is the CEO of IILM, the International Islamic Liquidity Management Corporation. We have Muhammad Akmal Muhammad Zazi, who is the regional head for wholesale banking at CIMB Islamic in Malaysia. We have Sabir Ahmed, the executive director for Islamic origination for Standard Chartered Sadiq. We have Mr. Khalid Al-Rukhayes, who is the executive manager for capital markets in Kuwait Finance House. And we have Dr. Scott Levy, the chief executive officer for Bedford Row Capital. So truly a very, very distinguished set of panelists, with great expertise in their own respective markets and having great perspective on the global direction of the Sukuk market. So we have a lot to get through. And with that, we would like to start. And if I can ask all of my fellow panelists to please turn on their cameras so that the audience can see them, but please keep yourself muted until I ask the question to you, to minimize any audio background noise that there may be. So without further ado, let's get right into it. And I think we want to start with Dr. Omar Hosseini. Dr. Omar, are you there?
Yeah, I'm here.
Excellent. So many insights that were shared by Brother Ijlal during his presentation, but one of the ones that stood out for me was the evolution of the balance between the short-term and the long-term Sukuk issuances. And obviously that is something, IILM, not only is a great driver of particularly in the international space, but has also been working on promoting the use of Sukuk as a liquidity management tool and as a liquidity management solution. I wanted to start with you, and I wanted to get your perspectives. How do you see the evolution of Sukuk and the development in the last year, but also going forward, how do you see this evolve, particularly with these uncertain economic and macroeconomic climate that we find ourselves in? And I believe, Dr. Omar, you also have a presentation that will help visualize some of the points that you intend to make.
Absolutely. Yeah, thank you very much, Mustafa. Let me begin with Assalamu alaikum wa barakatuh to all the participants. And I would like to begin by thanking the IIFM for inviting me to be part of this epoch-making event where we have leading industry players coming together, to launch one of the most authoritative reports on Sukuk globally. And permit me to congratulate Brother Ijlal and the entire IIFM team for their consistency and hard work in producing this annual report. I'm indeed glad to be part of this great event. I do have a presentation at least to walk you through some of the data. And in order to respond to the question from Brother Mustafa, I would like to provide some updates from the perspective of the short-term Sukuk, in the market, basically. When I say short-term Sukuk here, my focus will be on the cross-border Sukuk for today. And I'm sure many market players here today will be interested in such updates as the IILM Sukuk remains the only Sharia-compliant cross-border Sukuk in the market that is not only denominated in reserve currency, but also of high quality and tradable in the secondary market. Now, I'd like to proceed to the next slide, which gives you a snapshot of the IILM Sukuk position in the market year to date. Here, we are now talking about 2022. But let me just backtrack a bit. In 2021, we issued a cumulative amount of $14.12 billion US in 36 series of issuances throughout the year. So as you all know, we're always in the market consistently, and regardless of the volatility you have in the market, we are bound to issue. I mean, basically, being a short-term instrument in the market. Now, for this slide, you'll notice that the high market volatility since the beginning of the year prompted an issuance scarcity on the global Sukuk scale. And what you've seen is that sovereign issuers, as well as financial institutions and corporates, stayed on the sidelines as global central banks started to address the 40-year high inflation with an unexpected aggressive stance. The COVID-19 induced shutdown of the economy had kept rates near zero before the Fed started increasing rates by 25 bips in March, the first hike in more than 3 years. An additional increase of 50 bips came in May, and then the Fed in June raised interest rates by some 5 bips, which was the biggest hike since 1994. Central banks around the world with currencies either pegged to the US dollar or with majority exposure in its basket, have followed through and started tightening their own monetary policies. Despite the extreme turbulence experienced in the market, the IIFM Sukuk across its various tenures were offered regularly, and it represents up to 38% of the total USD Sukuk issuances globally year to date. Of course, I mean, this excludes private placements and some latest issuances we saw in the market in the past 2 weeks, including the USD Sukuk issued by Indonesia and Saudi Arabia. I mean, those were huge issuances we saw recently. Now, the short-term tenures of 1 and 3 months Sukuk constitute the majority of the ILM Sukuk issued year to date, which is about 75% of the total issuances. While the monetary conditions tightened and investors stayed cautious, the IIFM successfully launched its inaugural 1-year Sukuk tenure in July this year to address a certain long-standing demand. I will provide more updates on this later, during my presentation. Now, moving to the next slide, you'll notice, the frequency of our issuances, 1 year rolling. This slide, shows the regular frequency of the ILM Sukuk issuances on a monthly and on a 1 year rolling basis. One thing you will notice basically is the variation of the demand in terms of the tenures, which reflects the volatile market sentiment given the tightening monetary policy generally. And I'd like to share also that before the FOMC meeting in May 2022, when the market started pricing a more aggressive stance, the investor demand for short-term tenure surged, and the IIFM 1-month Sukuk reached its highest volume issued, which was about $600 million in April. Once the Fed provided more clarity to the market in terms of how serious it was proceeding with its monetary policy to control inflation, some market players shifted their interest from very short-term to long-term maturities, such as 6-month, as well as a 12-month Sukuk offered by the ILM for the first time in July. And the July 2020 issuance actually, marked the inaugural 1-year Sukuk. This landmark 12-month issuance was done before the July FOMC meeting, and the demand was sound, up to 1.85 times of the amount, issued that year, that month. Now, the next slide actually talks about the 12-month ILM Sukuk investor profile at primary. This is just to give you a snapshot, just for you to see the most recent updates from the short-term market perspective. As I said earlier on, this slide focuses on the first ever issuance of 1-year ILM Sukuk. And the 12-month Sukuk was issued in July, just before the FOMC meeting, as I said, which saw some 5 bips rate hike. Similar to all other tenures issued under the ILM short-term certificate program, this 12-month Sukuk auction was conducted under the competitive methodology with a single price as determined by the market participants, comprising the primary dealers and investors generally. The $250 million tranche was oversubscribed at 1.85 times, and the final pricing came up at 100 bips plus USD bills benchmark. Now, the demand mainly came from the GCC region, and we have seen a higher participation from the asset managers, up to 12%. In the next slide, we'll see the investor profile year to date for all tenures issued. But it is important to add that generally, asset managers account for less than 5% of the total issuance volume. For the 12-month Sukuk, which is the cross-border Sukuk. We believe it is a landmark issuance in the history of ILM and Islamic finance industry in general, as we strive to enhance our Sukuk offering and contribute our own quota to the development of the Islamic finance industry. Indeed, by regularly offering various tenures of Sharia-compliant instruments in benchmark size, the IILM fulfills its mandate by widening the alternative solutions for institutions offering Islamic financial services to manage their liquidity needs while complying with their HQLA requirements. It will interest you, our dear brothers and sisters, to know that since our inaugural issuance in August 2013, the IILM has cumulatively issued close to $90 billion in the market. As I speak here today, we are currently conducting the competitive auction of $1.34 billion, and we're going to finalize the auction by 6 p.m. inshallah, KL time. Moving on to the next slide, which I think is my penultimate slide, you'll see this slide actually gives you the profile of our investors. And this has fairly been stable compared to last year. And as you have seen earlier, the profile of our investors can also differ between different channels. As per the policy mandate of the IILM to provide liquidity management instruments for Islamic banks and beyond, 72% of buyers are banks, and 80% of such banks are Islamic banks. And when you look at the trend over the years, supranational and central bank buyers have been more successful in the auction. And expectedly, Islamic investors are predominant and mainly based in the GCC region. Though we see more interest coming from Africa-based entities, their cost of funding is fundamentally different. Besides, Asian-based investors' share has grown from 26% 3 years ago to almost 40% year to date. And moving on to the next slide, where we'll present some secondary market or data, as mentioned by Jalal earlier. This slide actually shows you the kind of liquidity we have, how liquid is the paper, on the secondary market itself. The secondary market trading volume, as you can see, exhibits a strong activity on the back of the frequent issuances, as well as high tangibility ratio of the asset portfolio, which allows tradability of the paper itself on a continuous basis. The weighted average turnover for series maturing between February 2019 and July 2022, it's 11%. And ladies and gentlemen, finally, as a cross-border liquid investment, we strive to ensure the tradability of the IILM Sukuk at all times. And this starts from the original structuring of the Sukuk itself and through the process and approved by the Sharia committee before we proceed to issue the paper. Now, primary dealers also help to enhance the liquidity of the Sukuk as they abide by an agreement to provide two-way price and ensure the distribution of the Sukuk among their investor base as part of their role as market players. I'd like to thank you for your attention, and I look forward to answering further questions. Thank you.
Thank you very much, Dr. Umar. A fascinating presentation and some great insights. Let me congratulate you on the launch of the 12-month Sukuk issuance. That is, again, a fantastic achievement in the industry. And I think that, some of the things that we will touch upon, it was very interesting to see the investor profile, both for the 12-month Sukuk and for the overall Sukuk program that IILM runs as well. And I think that, fitting in with some of the market conditions we've seen recently, some excess liquidity being available in the oil producing countries that tend to be some of the customers for ILM's issuances, and we can see that reflected that despite uncertain macroeconomic environment, there is some liquidity there that the Sukuk market can tap into. So very interesting insights, and I've made a couple of notes that we will go through, but I want to bring in some of the other speakers into the conversation. And Brother Sabir, I want to start with you. With the next question. Obviously, as Standard Chartered Sadiq, you have visibility across multiple markets where you support and Sukuk issuances and work with partners, and as well as for yourself. So I wanted to get your perspectives on the market as well, and again reflecting on what Sukuk market achieved back in 2021, but also looking forward both this year and future years. Where do you expect the market to continue to grow?
Sure. Thank you. Thank you very much, Brother Mustafa. And first of all, Assalamu alaikum to all the participants and Brother Ijral and the IIFM team as well. Thank you for giving us an opportunity to be part of this discussion with esteemed panelists. I would like to first cover 2021 and then come to 2022. So 2021 was a great year for Sukuk issuances. We saw some of the landmark deals, and if we look at the entire year and the nature of Sukuk issuances that came through in that last year, it was across the three set of issuers. So typically in the Sukuk market, there are three kinds of issuers: is sovereigns, financial institutions, and corporates. And in 2021, we saw Sukuk issuances from all three types of issuers. And that's a very good sign for market development. If we start with sovereigns, we see that government of Indonesia did their Sukuk issuance, which was a triple tranche Sukuk issuance and a very, very successful issuance. We also saw the green Sukuk tranche in ROI Sukuk issuance, so Indonesia Sukuk issuance, and we saw that every year Indonesia is not only making a Sukuk curve every year, but also adding a green tranche, which is helpful both for the investors as well as development of the Sukuk market. So that's a phenomenon which continues, and that is very good for market development. Other than that, on the sovereign side, we saw UK government return to the Sukuk market after 6 years and did their issuance. Again, a very successful issuance, an oversubscribed issuance. It's one of the few non-Muslim majority jurisdictions who have issued Sukuk and who continue to support the market. Other than that, we saw Turkey, Sharjah, Oman did the Sukuk issuances. So a very successful year for Sukuk issuances for sovereigns as well. When we come to financial institutions, we saw two very big financial institutions come to the market. We saw KFH, Kuwait Finance House, coming to market with their tier 1 debut Sukuk issuance. KFH is a very respected organization and one of the largest Islamic institutions. And it was a very successful issuance from KFH as well. We also saw tier 1 Sukuk issuance from Saudi National Bank. That one was also a very successful issuance. And also we saw a number of FI Sukuk issuances in the senior unsecured area. In terms of corporates, last but not the least, we saw a jumbo Sukuk issuance, which was the largest corporate Sukuk issuance. Standard Chartered was part of Saudi Aramco Sukuk issuance, as well as the sovereign and the FI Sukuk. And the most important thing about Aramco Sukuk issuance was that this was the largest order book. So the Sukuk was oversubscribed 6 times, and they ended up printing $6 billion, which is the largest corporate Sukuk. Other than that, there were other corporates as well. So all in all, it was a very important year for Sukuk issuances, which saw both regular issuers coming to the market as well as debut issuers coming to the market. As we go into 2022, the first quarter, we saw a number of Sukuk issuances. Indonesia did their Sukuk issuance, a dual tranche Sukuk with a green tranche, which is the largest green tranche ever issued. So government of Indonesia did a Sukuk. Then we saw Sukuk issuances from Arada, which is a real estate company, Tarar Khan, again a real estate company, and a few FI Sukuk issuance as well. So the first quarter was good. Then obviously with the rate hikes and the market situation, the market has slowed down. But again, it is more of a global markets issue, which is reflected in the Sukuk market as well, because the investor base, more or less, other than the Islamic investor base, the other investor base remains the same. So that's the reason for market slowing down. But having said that, obviously Standard Chartered is is appointed on a number of Sukuk issuances. We have a pipeline as well, and we see that we have a very robust pipeline. And once the market settles down, I think that the success of 2021 in terms of market development will continue in 2022 or the next year once markets settle down. So yeah, we are very hopeful about the development of the market based on the nature of issuers that are coming to the market.
No, that sounds very, very optimistic. And I think that, it's been reflected in that. You mentioned a couple of very interesting points. And obviously, Indonesia's development as a Sukuk market has been very fascinating in recent years. And, IIFM has arranged for a special presentation where they will look at, Indonesia as a country in focus for Sukuk market. You also mentioned the green tranches in particular, and that was also one of the concluding observations that came out of the report as well, and we will touch more about that as well. So a lot to discuss, but thank you, Sabir, for that. Brother Ikmal, if I can bring you into the conversation now. Obviously, operating out of Malaysia being a very, very developed Sukuk market and often pioneers in some of the issuances that they go through. What has been your perspective of the local market and how Sukuk has performed last year and how it is projected to perform going forwards?
All right, thanks, Brother Mustafa. First of all, I think Bismillah ar-Rahman ar-Rahim, distinguished speakers, ladies and gentlemen, and of course, brothers and sisters. First of all, I would like to take this opportunity to congratulate Brother Ijlal and of course, IIFM teams on the launch of the Global Sukuk Report. Again, I think being one of the representatives coming from Malaysia, I'll try to cover a bit more in terms of Sukuk issuance coming from this part of the world, especially coming from Malaysia. So I would define, I think, the year 2021 is basically where the corporates and the financial institution really making a comeback really to the so-called Sukuk market. Just looking at the statistic of which are being pulled out, I think from Bank Negara Malaysia website, I think we can see back in 2021 in terms of the Malaysian corporate Sukuk issuance, I think we are looking at 91.4 billion in Malaysian ringgit, almost at par in terms of what we have seen really during the pre-pandemic level back in 2019. So far, I think we are thankful in terms of the so-called accommodative market that we have seen here in Malaysia. And of course, I think going into the year 2022, we have seen in terms of the issuance, I think has slowed down a bit. But of course, I think these are basically the trend that we have seen globally as well. But I guess I think if we were really to look at the so-called Malaysian issuers, I think we cannot run away in terms of one of the key observations I think we have seen in the market, especially coming from the financial institution, really as the issuer. I think we have seen sizable, I think, issuance coming from the FI market. And if you were to look at the so-called issuance, I think be it a sustainability issuance or tier 1 and tier 2 issuance, there is a trend that is really skewed towards ESG and green issuance. To give you an example, I think we at CIMB, I think in December last year, I think for CIMB Group and CIMB Bank, I think they have put in place sustainability tier 2 Sukuk, which is a ringgit Malaysia 10 billion, I think, program size. That is something that we observed last year, and even in the previous year in 2021, I think we have seen also Agrobank, I think, issuing their sustainability Sukuk to the tune of ringgit Malaysia 500 million. And the trend also, I think, continue in the year of 2022. This year alone, I think back in the month of April, I think we have seen MBS being Bank Berhad also issuing about 300 million of sustainability Sukuk. And of course, later on in July, I think we have seen SME Bank also following suit, issuing about ringgit Malaysia 300 million. And I guess I think these are the trend that I think we have seen really here in Malaysia. And if you were to look in terms of the government-linked companies, really, I think back in 2021, I think we have seen Dua Capital Limited, which is technically an issuer coming from Khazanah. I think when it comes to the so-called issuance, I think the demand, I think, is quite strong, where it's being oversubscribed really by 6 times. Of course, moving quickly, if you were to look at the sovereign Sukuk issuance, I think we have seen really number of sovereigns actually making a return really to the market. And I guess I think this was mentioned earlier by Brother Sabir and of course by Dr. Hosseini earlier. So we have seen basically the UK government, Malaysian government and Indonesian government, I think has issued really back in the year 2021. Probably won't deep dive into the so-called Indonesian or rather Republic of Indonesia issuance. We do know, I think they are basically one of the emerging global players. But of course, just to look at the issuance coming out of Malaysia, specifically, I think the government of Malaysia 10-year $800 million sustainability Sukuk issuance, which is the first ever US dollar sustainability Sukuk really offered by sovereign. I think what we've seen is that I think this particular issuance, I think, is not only unique, but of course, I think this is really the first ever US dollar sustainability Sukuk where the use of the proceed and the underlying asset is tagged either to green or social projects. So again, I think as part of this so-called issuance, in terms of innovation that's been put in place, being vouchers representing the travel entitlement of Malaysian Light Rail Transit, which is a public transport. I think this is one of the areas of which we would foresee more innovation really coming in. And I guess I think the other area of which we should be looking at really, I think in the year 2021. With the requirement coming from EOFI, especially on the Standard 59, is really in terms of the issuance coming really from the Islamic financial institution, I think being in the form of subordinated Sukuk and even the global senior unsecured Sukuk. I think we have seen actually a number of them actually comply with the Standard 59 requirement, such as the so-called tangibility ratios and of course the treatability requirement. And looking at the so-called order book, I think we can see in terms of the multiple, I think is quite comfortable between 2 times to really to 3 times from the so-called order book perspective. Again, I think in terms of the trend in the global Sukuk, like what I said earlier, I think innovation on the underlying asset to comply with Standard 59, I think that one, I think there will definitely be a focus going forward in the year 2022 and going forward as well. But of course, again, I think when it comes to sovereign issuance, most of the sovereigns, I think they could rely on the so-called Ijara structure. And what we have seen is that I think for some of them, they're actually using what I call a hybrid Ijara structure and of course, together with the Community Murabah structure. Again, I think at least I think from the perspective of the Malaysian, again, I think when it comes to the corporates issuance, when it comes to, let's say, on the property development space, I think where they are really assets heavy, they could continue to rely on the so-called Ijara structure. But I guess I think for other Malaysian corporates where they are really asset-like, I guess I think the demands for innovative structure would always be in demand. So I guess with that, I think Brother Mustafa, I pass back the floor to you.
No, thank you very much, Brother Ikmal, for sharing your perspectives. And you mentioned a couple of very interesting things. I love the way you phrased at the start, this is, corporates and FIs making a comeback after, the Sukuk market being dominated by sovereigns for many years. And I think it collaborates very closely with what Brother Sabir was also mentioning. You mentioned, tier 1, tier 2 issuances and ESG Sukuks in particular. And that's something definitely we will talk about as we go through the conversation. And of course, no Sukuk session today can be complete without, reference to IOFI Standard 59. So I'm sure we will have an interesting discussion about that as well if time permits. But a number of points which we will come back to. Brother Khalid, I want to bring you into the conversation. And obviously, being part of one of the largest and oldest Islamic banks in the world today, you would have a unique perspective, not just in the Kuwaiti market, but also more regionally. Do you concur with some of the points that, Brother Sabir and Brother Ikmal and Dr. Omar have made during the discussion? How did you perceive 2021 from a Sukuk perspective, and what do you see going forward in this space?
Assalamu alaikum wa rahmatullah. Thank you, Brother Mustafa. First of all, I would like to congratulate the IIFM on their 11th edition. the IIFM publications were always a source for us as investors, especially, or portfolio managers, to see what was done in the previous years, and it helps us for future outlooks too. So getting back to your question, Mustafa, on I do agree with the points mentioned by the gentleman. Just to go on a more secondary market perspective, let's say, starting from 2022. I mean, we started the January with some issuance coming to the market, but as soon as we moved to Feb and the Fed indications on rate hikes and the probabilities from the market started playing along on Fed hikes, the volatility started playing in the markets. Another layer came in with one of the main variables on the 20th of Feb was the Ukraine war, which added a new variable to the story, which added more volatility, which we saw affecting the supply chains and the oil or the energy disturbance. Now, how it's affected the markets in generally, to be honest, it made the primary market on Sukuk and in general in the whole sector actually, or the whole financial industry, to drain down. So there was not much Sukuk issuances, or the pipelines drained down mainly of one important characteristic. One thing is that for the region, oil prices went up dramatically, which helped actually the GCC countries, which reflected with the budget surplus, which they were facing with deficits before now, so they're more comfortable. And when it came, they are more. They had the opportunity to wait and analyze the market and see if there is a better opportunity to enter or not. So some of the primary, let's say, issuers of the sovereign side took the sidelines at that time, and financial institutions and other corporates followed because of the volatility of the market. So what is reflected on the secondary actually is low liquidity and low trading in the secondary market, mostly because the movement of prices of the current Sukuk in the secondary. Many investors don't want to book any losses at these prices and started selling. That's one thing. Another thing, there is no other alternatives to invest in once the liquidation happens. So small volumes in the market started moving these the Sukuk prices in the market. With these volumes and demand actually with no supply, made some names quite expensive. That's one aspect. Another thing is many investors went to high yield Sukuk to compensate the uncertainty, let's say, that's moving forward. So they prefer putting some in their investments in high yield Sukuks to prevent this volatility reflecting and let's say causing a negative carry on their investments. So we saw some great demand on perpetuals on the secondary market and high yield Sukuks, but unfortunately there was no volumes or offers in the market. Then we moved with a couple of issuances that came during these periods. I believe that the brothers covered a couple, and many of these issuances had to put premiums on the table to attract investors, and that's, I mean, something that was very important in uncertain environments. Premiums prices are not tightened all the way because of the uncertainty, and to have a healthy book, to build up a healthy book, and that's what was done. And then because of this uncertainty, we also usually after primary issuances, we see an active secondary market straight away after the books are closed and allocations are out. This didn't happen at this time. The liquidity was really low, and prices most of the time fell below par after secondary market trading on these assets. Moving to till today and moving forward, actually what I see is the uncertainty or the volatility will still be there. It's all about numbers that come from the US regarding the inflation. It's like a puzzle, a piece by piece coming out to get a clearer picture. I believe on the primary side, there will be very tight windows that will come up, and issuers will take advantage of these tight windows, and sometimes maybe big issuers can affect the small or new issuers to the market. So that's one important variable I think is going to happen. Another thing is most of the issuers I see will wait for the first issuer to come to the market. That's an important thing to see how the primary market is affected and how the books are built and what's the demand. And based on that, decisions will be made on others to come to the market or not. So I believe, as I said, there are small windows, tight windows till the end of the year that we will see issuers coming to the market. There is a lot of liquidity have been built up since the beginning of the year. Many investors have liquidity they want to park in assets, so they will. I believe there's going to be demand in the market with the right pricing. Maybe something we're going to cover later regarding how liquidity is managed. One of it in the short-term liquidity, I believe we can cover later on. So that's in short-term perspective on the secondary and the primary market. Thank you, Mr.
Thank you very much, Brother Khalid. And I think you articulated the situation very well. We did see the year start with positive momentum, but with the price issuances, with the geopolitical issues, we've seen a significant change in the market. And as you mentioned, small volume movements are having adverse impacts on prices of some of these instruments. There's a shift towards a higher yield there. And as you said, there is a wait and see approach in the market for some other issuers to come, see how the order books play out, and then some of the people will come through. And in the interim, there is that liquidity buildup, which we will touch upon as well. So some very interesting insights. Dr. Scott, last but not least, you have the unique privilege of having heard all the other perspectives from the market and to really reflect on that and to give your take on where you see the Sukuk market moving.
Well, thank you, Mustafa. And again, congratulations to IIFM on this 11th report. It is not only a benchmark for research, but also a guide for future issuers. And I think my perspective in terms of looking at global corporates and trying to tap into the opportunities there are that have been mentioned in my previous esteemed colleagues about the state of the market. I have to say that a lot of the notes that I had made that I wanted to say were, of course, very well covered by previous speakers. But I think one of the things from a corporate perspective, I think the three things that I just want to highlight briefly, and I can sort of summarize them as democratization, delabelization, and standardization. And I think when we look back at what happened last year and then moving forward into this year, I think the reality is the war in the Ukraine caught a lot of people by surprise in terms of the impact that it had globally was slightly unexpected, which has meant that the challenges or the opportunities that 2021 saw as COVID started to release its grip and people looking to the market and preparing themselves potentially for new issuances. And we saw a pipeline of interest from countries like Bangladesh, like the Maldives, like Qatar, like Pakistan, saying we now want to go to market. We know that there's been a buildup. We know that there are now opportunities in the future. And as corporates, we want to have access to this global Islamic market and the liquidity and the experience that's there. And that took a bit of a hold when the war took place and inflation all of a sudden reared its head in the various ways that have been described today. And I think the outlook for 2022 and into 2023 can be summarized in a number of different ways. And from our perspective, I think the first thing is around this, what I said, democratization, which is not about retail investors. It's about getting more corporate issuers to market, creating a platform. And the Al Wasila platform that we created specifically was designed to do that alongside of all, the other support and the role of the investment banks like Standard Chartered, like CIMB, in their role in bringing expertise to help new corporates access what's just been described as an enormous amount of liquidity sitting in there. And that democratization exercise sees itself in two ways, which is, of course, primary issuances into the market, but also we've seen a lot of interest in club deals on the private side. And those private deals, and for these new corporates issuing, they need the support of standardization and the work of IIFM to create a platform that means that new corporates can rely on the standards that are in place to help them direct or at least give them some industry level guidance as to what those things should be. And that reduces the cost of issuance, which reduces one of the key barriers to entry. And particularly when we look at delabelization, we've mentioned ESG, and I prefer, to be honest, to use SDGs because they're more quantifiable targets. But this idea of green sukuk and the demand that's needed for infrastructure, for renewable energy, for some new technologies, which more akin to private equity type transactions could benefit from a broader recognition of what that definition of ESG means. And in my discussions around and looking at the different markets between North America, Morocco, South Africa, the CIS countries, where they're looking at tapping into the market, it's very, very important, I think, given the amount of liquidity that's there and given what is inflation, that they are looking at themselves in the high yield, if you like, the high yield sukuk space. And I think there are hard assets there as well. So I would think that we will see in 2022 and 2023 more asset-backed sukuk that fit into the high yield category to compensate for, one, the amount of liquidity that's there, and two, that the uncertainty associated with investing in new corporates and new markets. But this, if we can target returns of 7, 8, 9% with assets underneath, like aircraft sukuk. I mean, these were things that were done 15, 20 years or 15 years ago, which there is a demand now for, more equipment to flying in the air, very easy to secure, very easy to track, and very attractive yields. Even things and at the other end of the spectrum, trade finance, again, a traditional source of Sharia compliant investing that doesn't get the same penetration into the investor community that it used to have, but we need food. And that offers opportunities for return and sustainability and all the things that we need around, democratizing the flows of capital into the markets where it's needed most. And I think the bringing together these themes, and this comes back to what we refer to as delabelization, is that we need to kind of join the conversation with COP26 world and the way in which the conventional world is talking about ESG. And I've been fascinated. I've had at least a dozen interviews in the last 9 months of conventional investing journalists asking about this overlap between where Islamic finance can fit into the ESG conversation. And so there's an interest there. And I think that as an industry, we need to align ourselves better because, the 20% that I think Dr. Umar mentioned is coming in from non-Islamic banks investing in IILM is an indication of where that demand could be. So even more liquidity and more interest in what we as a market have to offer. I think the one challenge that we have, and the most important one, is probably human capital, is that making sure that the people are trained and that the work of IIFM and the other standard setting bodies are educating the people in the banks, the investors, the participants, to be able to to take advantage of the opportunities that are there to create better products for the market. But the bottom line is, and I think the interesting thing is when I travel around and talking about, yes, this corporate demand, yes, they want to access the market, yes, there is a demand for high yield. But this is where the important work of IFM is so critical, because they talk about standards, but standards have to be bigger than just national standards. And I think the more work that is, as the work that's been done previously and the things that are in the pipeline, will have a greater impact in that route to get to that 1 trillion issuance goal that was mentioned at the very beginning. And I think it's a fantastic opportunity to participate. I very much appreciate it. And thank you very much, Mustafa, for my opportunity to speak.
Thank you very much, Dr. Scott. I think you raised some fantastic points there, which I definitely want to get into, particularly around human capital development, aligning with COP20, with the COP programs, and regarding standardization of being beyond national standards. And I think these are all very relevant. Gentlemen, I'm mindful of the time. We have about 20-25 minutes left, and there's a lot of points that I want to go through. So I want to open up the panel discussion really to cover some of these important issues. I would also like to mention to all the participants to, please share your questions using the Q&A feature, and I will get to it if we have time, and I will put your questions through to the panelists to get their perspectives on them. So let's get right into the conversation. And I think that one of the key things that I want to start with particularly is the role of Sukuk as a liquidity management tool, right? And Dr. Umar, maybe we can start with you on this particular point. We've seen the statistics and the growth of the ILM program, and Brother Rijal also shared with us the growth of short-term Sukuk as an instrument. But from your perspective, when speaking to your primary dealers, when speaking to your investors, what do you feel? What has been that development of Sukuk being accepted and being utilized as a short-term liquidity instrument, and what are the existing challenges that still persist that may not have been addressed that we as an industry need to tackle?
Yeah, thank you again, and thank you for that question. Generally, we've seen a lot of trends, amongst our primary dealers, and some of whom are represented on this panel, like Bro Khalid and Sadir have been from Central Bank. Basically, what we've seen generally, it's we talked about the market volatility. Some really not trading on our papers. Some of our primary dealers are quite active, on the secondary market, while some do not really want to play the market market maker kind of role. So we've seen this, over the years, and again, we keep engaging with some of them to ensure that we fulfill this mandate. The policy mandate is very clear. We are expected to provide this cross-border paper, for liquidity management beyond just, several jurisdictions. We are here to complement the role of different central banks and monetary authorities in their respective jurisdictions. So we have seen a lot of situations where we actually provide, liquidity, in a way through issuing this paper. But again, we let me use a conventional term. We actually lend long and borrow short in a way. From the asset side, in terms of structuring, all our assets are based on private placement, and this private placement basically are based on different structures. And when you look at the different structures we have used Ijara, and sometimes, when people go on to debate the issue of standard 59, and I've seen that in one of the questions, basically, the OFI standard, basically, I think this is something very important for the market. Yes, for the corporate issuances and most of the sovereign issuances, I guess there's a big challenge here. But what we do in ILM, and having the Sharia committee where you have members, some of whom, they also sit on the Sharia committee of AOFI, they have actually, ensured that we have enough, what you call tangible assets, basically, in the pool. And for us to ensure that the Sukuk itself is liquid, tradable on the secondary market itself, we have to actually ensure that during the structuring, we have enough tangible assets, so not just financials. So this is something we have consistently ensured. And as I speak today, we have 79% of the assets as tangible assets within the pool itself. So that ensures that at every point in time, the paper is liquid on the secondary market. And I've shared some of this data with you earlier, and you've seen, and most of our primary dealers actually trade on this paper. And generally, what we've seen, I won't share some of the data we have because we have some live data as I'm speaking now. I'm getting messages from the, from our business operations team on the ongoing auction. Basically, we have some live data, but I won't be able to share that. But again, we are seeing a situation where you have high volatility in the market and there are different kind of trends. Now, the 12-month Sukuk, again, I think it's very important to mention this. One of the feedback we got from one of the primary dealers is that they really like it. Basically, even though you have some of the hikes, going on, by Fed, but I think this has really provided the market with a tool to trade on, consistently. So they have actually gotten a lot of inquiries from prospective investors, who are asking questions about this paper, seeing a kind of, a 12-month paper, for the first time for cross-border liquidity management. And again, I would like to say that we're getting a lot of reverse inquiry from even the US market. It's interesting we issue Reg S paper, the whole world except the United States. But we're getting a lot of inquiries also from the US market. It seems there is enough liquidity there, from the Sharia compliant sector. But again, they're looking for products, to invest in. So I think we've seen this different kind of trends generally. But when you look at the primary market, I think it's important I emphasize this. Though we have 10 primary dealers, who actually participate during every monthly auction we have. And I can tell you, we've been issuing over $1 billion for the past, I think, over a year now, every month. So we're always in the market. Here, some of the issuers, the sovereign issuers, as it was discussed earlier, they adopt the wait and see kind of, attitude. They want actually to see others going fast and see. They want others to test the waters before they actually come to the market. But in our own case, we cannot afford not to issue. So that's why you see the high volatility. I don't know whether I show the slide where you have the different profit rates and even the BTC, the B to cover ratio. It's quite interesting when you see at the peak of the pandemic in April 2020, we saw a lot of investors. Some were not willing to roll over their positions. So we had to reach out to some of them. But again, it's understandable at that time. So again, as Khalid mentioned earlier on, I think one thing we had to do is we had to actually give issue at the premium. Basically, it happened in April 2020. So this is what we've seen. So we have the ability to adjust to market kind of forces at any point in time because we cannot afford not to issue. Regardless, even if there's market shutdown, we have to hit the market. But we have the ability to adjust even the profit rate as much as possible, and that will actually be in favor of investors generally. So I think for now, I think this is what I'm going to share, and I'm happy to provide more details as we proceed with the session.
No, thanks. Thank you, Dr. Omar, for that, and it is very good to see and very comforting to see that despite the shocks that we saw in the system, that there was no disruption to the program issuances, and that continued through that entire period. Brother Khalid, very quickly on this point, when you think about liquidity management solution for yourself, for your clients, is Sukuk now something that stands out, and is it something that is a key liquidity management tool? And if there's anything lacking, what would that be?
Thank you, Mustafa. As Dr. Omar is truly right, the IILM, KFH is a primary dealer actually in the IILM, and we're together now in today's auction actually. I'm getting the messages too about the updates on that. So the IILM paper is KFH was in collaboration with the IILM since 2013 and even before from the start. And we saw how the IILM paper evolved during these years till today. The IILM paper, we still see more potential from it in the future. It helped us a lot during these periods of volatility and uncertainty. There is excess liquidity could be parked in these types of issuances. And for the IILM, having an auction every month, no matter what the circumstances, gives a great benchmark for the investors to see where the market is pricing those tenors. We have the interbank activities on the money market, but those are only one-to-one relationship between two banks, and it's really hard to benchmark it or get the exact pricing. But for an IILM, it's a competitive auction. You place your bid, you see where the bid, investors see the pricing of these tenors, and it gives you a very clear guideline of the pricing of these tenors. Secondary market liquidity have been enhanced during these years incredibly. Before we were seeing it was only a bit of a small activities in the secondary. Now we've been seeing activities gaining to pick up. We've been approached by many investors. That's something that we didn't have in the past, asking about the IILM and more information. Fund managers, this could be a helpful tool in fund managers or even to manage the liquidities and until they see better opportunities. And an important role that Dr. Omar mentioned is the role of the primary dealers. That's something I really wish that we can enhance even in the future. And I ask my fellow primary dealers even to have an active secondary market pricing and be there to price a two-way pricing for the clients to have a deeper liquidity during the life of the sukuk, so we could even have a better pricing during the issuances. That falls on the long-term sukuk or the short-term sukuk. We need market makers in the market to provide the liquidity. We are a smaller market than the bond market, and we need these players, especially the Islamic financial institutions, to be there as a market maker. KFH has a primary role, and we're doing it in the long-term or the short-term issuances. We are pricing two-way prices, trying to have this liquidity in the market and playing the role of the large Islamic institution. And I hope it's the same for the others. Thanks.
No, that sounds great, Khalid, and definitely, we look forward to that. If those benchmarks and those other things come in, then the secondary market can also continue to develop and then the industry can evolve. I'm mindful of time, so I'll keep the questions short, but Brother Ikmal, I want to come to you. And one of the points that was consistently repeated throughout many of the panelists' comments was the emergence of green sukuks, of ESG sukuks, of sustainability-linked sukuk. And obviously, Malaysia has been a pioneer in that area. How do you see this evolving, and how do you see this slowly growing to become a global benchmark? Because although green issuances have accelerated significantly, it still makes up a very small base of overall sukuk issuances.
Yeah, thanks, Brother Mustafa. Before I move quickly to that particular question, I think it's also good to address really in terms of the use of sukuk really as a liquidity management tool. And I guess probably I think one part that we could be missing is that I think the demand for the sukuk definitely going to increase as some of the Islamic financial markets like Indonesia, where they are going through the so-called spin-off policy, where their Islamic banking business, I think, will need to go through a spin-off. And in Malaysia, I think we've gone through that process, I think, even before 2010. So I guess, I think from demand perspective, where bank would need to maintain certain amount of high quality liquid assets, generally in the form of sukuk, I guess I think there will be the demand, I think, would definitely increase. And of course, in terms of the diversity of the issuance, I think we probably need to look really beyond sovereign issuance, because at the end of the day, I think there's certain level 1, level 2A and 2B of which a bank would need to maintain really in terms of basically optimizing in terms of their so-called compliance costs. So really going back to the so-called SDG green issuance, I think we do know, at least here in Malaysia, and a couple of days ago, I think there was a joint statement that was made by the Central Bank of Malaysia and of course the Securities Commission of Malaysia in terms of basically their focus really towards ESG or SDG. So at the end of the day, I think what this so-called ESG and SDG is going through is similar experience of which the Islamic finance is going through in terms of basically what is required when it comes to the so-called issuance, I think, be it negative list and of course a certain level of screening required. At the end of the day, is really to achieve three key consideration, right? Because at the end of the day, from the issuer's perspective, I think if technically they try to open themselves really to a wider investor base, as we have seen a lot more investors going for basically value-based in investing, I think definitely not basically making your so-called issuers available to this type of investors would really limit in terms of basically the demand or the price of which you are going to get really at the end of the day. But of course, again, I think the other key question is that I think we have seen really in the financing market in terms of rebate that has been given out by banks really to encourage corporate clients to take the financing with certain sustainability performance target or sustainability utilization. Similarly, I think the expectation, I think, from the sukuk market is also similar. But of course, at the end of the day, I think green premium, that's something that cannot really be guaranteed. But of course, just looking in terms of how really the market works, right? As long as basically you're yourself really to the wider investors, I think you will be able to achieve what you are really looking for. Again, I think what I believe is that I think when it comes to ESG, I think it's more in terms of basically the cost of basically having that so-called transaction, because we do know, I think there's a certain level of validation is required. I do believe, I think going forward, I think some of these additional costs, I think will be baked into the overall transaction, and the cost of issuing, I think won't really be really a showstopper really for the investors really to go for ESG and green insurance. Yeah, back to you, Brother Mustafa.
No, thank you, Brother Akmal, and that sounds very, very interesting. And I want to stay on this theme of the ESG development. So, Brother Sabir, I want to bring you into the conversation. Obviously, you have great visibility across different markets of some of these issuances coming through. How do you see the green and sustainability and ESG issuances in the near term? What do you think are the big challenges that we need to overcome? And with that, there's another question that I want to put for you that maybe we could get your comment on as well, which we haven't unfortunately been able to touch upon, but I think is very important. That's the, what's happening on the private placements and the private issuances in the Sukuk space as well. So if we could get a couple of quick comments on that as well, and also on the ESG question.
Thank you, Brother Mustafa. So just touching upon the ESG side and the pipeline and the issuances that we see in the works, we really think that the ESG issuances and sustainability issuances will increase going forward. And the reason is very, very simple. If we look at the Sukuk investor base, it can be divided into the conventional investor base and the pure Islamic investor base. Islamic banks and Islamic institutions in the region are becoming more and more ESG focused. You would have seen that, and all the banks have set up their ESG units, and they're focusing on ESG investments and ESG financing, because most of the countries in this region have given their commitment of net zero, including UAE, Saudi Arabia, so on and so forth. If we look at the conventional investor base, especially the European investor base, are very much focused on ESG. They want to look at issuances which are green as far as investment is concerned. So based on the investor base, we believe that there will be a lot of growth in ESG issuances. In fact, most of the financial institutions in the region have already prepared their frameworks, their SDG frameworks. So they have already prepared their frameworks. Those frameworks are already part of the program. To name a few, Riyadh Bank this year did a sustainability tier 1 Sukuk issuance. Then we have got IDB, who have got a very active sustainable framework. We have got a few other banks as well. Saudi National Bank again did a tier 1 sustainability Sukuk. So all of these institutions and some institutions which are which are in the works have already prepared or in the process of preparing their sustainable framework. So we definitely see growth in this area going forward. Coming to the private placement area, I just wanted to comment. If you look at Islamic banking as a whole, the good point is that Islamic banking has developed. Now, obviously, the Sukuk market is down this year compared to previous years because of market factors. But again, look at what it has achieved as an alternative. As an alternative, many institutions they have a choice now that if the markets are not right, they can look towards either syndicated markets or they can look at private placements. And we have seen a lot of private placements happening, because the benefit of private placements is the benchmark pricing of that institution doesn't change because the transaction is technically private. So we have seen a number of private placements as well, and we have seen syndicated deeds as well. So at least the Islamic issuers, Islamic banks, and the corporates which have a focus towards Islamic financing, they have alternatives to move to if the markets are not right for them. So that is a good that is a good point on an overall Islamic banking front as well.
Thank you, Brother
Thank you.
Sabir, for that. Dr. Scott, I want to come to you now. And you know, one of the things that you had mentioned, which is very important, was around the issue of standardization. And of course, standardization issues multiple different aspects, including you know, alignment with the COP goals and the sustainability drive within the Sukuk space, right? So how important are global standards for the industry, you know, from this perspective, and you know, the efforts of institutions like IIFM and others, how does that help drive growth in that in the market?
Well, I think the most important thing that it drives is confidence or trust in those issuers which can follow those standards. Because I think one of the things that we've seen in Europe, at least, around the development of the EU taxonomy was an issue that arrived, which was greenwashing. And if you compare, for example, the European initiatives to what's happening in the US, where they almost have no concept of it. They're trying very hard, but it's not going to have any impact. So the EU setting a standard for trying to make definitions around what is, for example, green, and green distinct from ESG. And there's two different sets of discussions here. That the importance is then from an investment perspective, from an investment manager perspective, from a financial institution perspective, is certainty and confidence in the fact that there's a measurable standard by which this decision can be made to invest in product A over product B. And you know, it's quite interesting from the Islamic finance perspective that the underlying principle of the EU taxonomy is do no harm, which you know has that lovely overlap with everything that we talk about in terms of Sharia investing. And that the idea then to export those standards, to export certainty, to be a provider of a benchmark standard by which other people can then comply with, makes it easier for new corporates and new issuers to enter the market, because there is a guideline that they can follow. And yes, there is a little bit of an additional cost, as was raised previously, but the idea is that that cost then becomes following a standard, not having, I hate to say it, kind of consultants who are acting in slightly gray definition areas where, you know, the costs can be unmanageable. I think what we've seen is this is what's happened with credit ratings. And the idea where credit ratings have published methodologies, what we're missing in this sector is in sort of the ESG general conversation, or specifically green, is acceptable methodologies, which are supranational. And the work that Malaysia has done, for example, in setting out, you know, the framework documentation and as a guiding light. When I talked, as I said, having mentioned discussions in Singapore or the wider region, you know, they're saying, well, we need a standard like Malaysia, but actually that's not going to achieve anything, because then we have a messy jigsaw puzzle of standards. We need global standards that are recognizable, that are supranational, that then all of us can be part of the same conversation, whether we're a financial institution or a corporate issuer or a conventional investor. That creates the marketplace, and it creates efficiency, and it improves pricing and access, and all of these things which, you know, we're talking about. Without that, we're going to end up with, you know, a no clear, sort of slightly chaotic market where nobody really knows what ESG means. And I hate to say it, but I think CSR, SRI, ESG, there's going to be some other terminology that will come that may end up being the standard. But at the moment, you know, I think it's very important to harmonize so that, again, more issuers and more depth and more breadth of market is possible.
No, I completely agree with you, Doctor. And, you know, it brings back, you know, memories of, you know, the 1990s, where the industry was not a global industry, but just a bunch of individual silos operating almost completely independently. And we don't want to go down that route, because fixing that is much more difficult, rather than everyone starting off on a consolidated vision for where the global industry should go. Gentlemen, thank you so much. I'm very mindful of the time, but there is one question that has come through the Q&A that has piqued my interest, which I definitely will not ignore. And that is to Brother Sabir and to Brother Khalid. And the question is around IOFI Standard 59. And basically very, very direct question, whether Standard 59 has affected Sukuk issuances in your respective jurisdictions, and if so, how do you tackle that? Now, obviously, we heard from Dr. Umar. I believe it was, he mentioned 79%, if I'm not mistaken, but thereabouts of tangible assets. But not every issuer has that luxury of being so far above the threshold. So maybe Brother Sabir, yourself, and then Brother Khalid, very, very brief, 1 minute if you can respond. Have you seen it impact issuances in your jurisdiction, and how are you tackling that?
Sure. Maybe if Brother Khalid allows me, just from my side, yes, it has impacted, but what it has brought is standardization in a Sukuk structuring. I think through Standard 59 and the tangibility ratios attached to it. Previously, yes, the tangibility ratios, acceptable tangibility ratios were different, but at that point at that time, we would take an Sukuk to the market, and then we will see a few investors who will not come into the market because it is not their Sharia guidance or Sharia preference. With Standard 59, I think we have come to a standardized platform where structuring and even documentation has become quite standardized. And now when we go to the market with a Sukuk issuance, we see maximum investor interest, both from Islamic investors as well as conventional investors, because conventional investors are very keen to see that a Sukuk which is launched is acceptable to the entire Islamic investor base, including the investors who prefer AOFI, so that there is a better secondary market performance in the issuance. So from my side, I think it has brought about standardization, which I believe is good for the industry.
No, that's excellent and very well put. Maximum tradability, even if that is not your concern, you want to make sure that there are customers that would be in the secondary market for that issuance. Brother Khalid, very, very quickly to you for the same question, and then we can continue.
I totally agree with Brother Sabir on this standardization. I mean, it was a bit of a hiccup at the beginning because something new, and the issuers or investors didn't take part in some issuances, as we know, because of the standard. But I mean, it evolved, and now even issuers have been put this standard under their perspective and included, and make sure they apply. And it helped to bring back key market investors to new issuances. And that's the good thing about standardizing those documentations. Thanks.
Thank you, Brother Khalid. And, ladies and gentlemen, with that, we come to the end of our session. I want to, thank my fellow panelists for sharing their expertise and insights. It was a very, very interesting session. And with that, I will hand it over back to Dr. Ahmed, and good luck to IIFM for the rest of the webinar. Thank you, and assalamu alaikum.
Alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, my dear brother, Mr. Mustafa, and the distinguished speakers for these fruitful and useful discussions on various, related scope issues. In my view, the main takeaways from this session: one, year 2021, it's a very good year for the scope market and issuances, and we hope this trend to continue in the year 22 and beyond. The second thing is about the human capital development in terms of training, etc., and standardization to the development of the industry as a whole, which is very, very important. And I completely agree with the Dr. Scott's lady on this. So now, thank you very much, Mr. Mustafa. Very much. In the new year, being the most populous, Muslim majority country, it is always of great interest to all of us regarding the development of Islamic, financial industry. So let us hear from Mr. Arif Atawan and Sister Dwi Rianti how Sukuk is developing in Indonesia. Over to you, my brother and sister. Over to you, Mr. Arif.
Let Miss Lady first, Miss Dwi first. I think it's good. Our colleague from Ministry of Finance, please, Miss Dwi.
Okay, thank you very much, Brother Arif and Brother Dr. Ahmad Rufai. Let me start with the. May I share screen? Okay, thank you very much. Assalamualaikum warahmatullahi wabarakatuh, ladies and gentlemen. First of all, on behalf of the government of Indonesia, I would like to thanks to the committee to invite us to share our experience and to share to you our success story of Sukuk Negara, the name of sovereign Sukuk of the Republic of Indonesia, and some of our experiences in developing Sukuk Negara. Next, please. Yeah. Here, from your right-hand side, I will show you about the effort of the expand the alternative source of state budget financing and to develop Islamic financial market. The government of Indonesia has been issuing Sukuk Negara since 2008. Sukuk Negara has been one of the primary state financing source and also one of the main Islamic investment instrument in the market. Within 14 years, Sukuk Negara has played an important role not only as an instrument of state budget financing, but also as a driver of Sharia financial industry development in Indonesia. The success of Sukuk Negara issuance was in line with the effort in developing the market continuously as an attempt to create an active, deep, and liquid Sukuk sovereign Sukuk market in Indonesia. Here from the picture, the milestone of Sukuk Negara began in 2008 with the enactment of Law Number 19 of 2008. Developing sovereign Sukuk in Indonesia has been supported by strong legal framework where we have a specific law dedicated for Sukuk Negara, which is Law Number 19 2008. Only 3 months after the enactment of the Sukuk law, we started to issue Sukuk domestically for amount of 4.7 trillion IDR. In 2009, the government of Indonesia began to issue retail Sukuk series for individual investor, global Sukuk, Indonesia Hedge Fund Sukuk. I think that one is the only type of Sukuk in the world, Indonesia Hedge Fund Sukuk, and start Sukuk Negara auction for the first time. Moreover, in 2010, Sukuk Negara was commenced regularly. In every auction, the government of Indonesia has consistently offered several Sukuk Negara series with medium to long tenor to accommodate the potential demand from all types of investors. To encourage the development of Islamic money market instrument, as well as providing for liquidity management, in 2011, the government of Indonesia issued Islamic treasury bills through the auction method. In the same year, government of Indonesia also issued project-based Sukuk for the first time to provide direct benefits to infrastructure development. In addition, to meet the need to refinance maturing short-term Sukuk and as a benchmark of T-bill Sukuk price, the government of Indonesia for the first time carried out an additional Sukuk auction. We call it Green Shoe Option in 2012. In 2013, the government of Indonesia began issuing project financing Sukuk, a type of project-based Sukuk where the proceeds were earmarked for specific projects. The project financing Sukuk got a good response from various parties and consider a solution to scarcity of the infrastructure financing, of which the need was quite high. Project financing Sukuk is one of the innovations by the government to provide an alternative source of fund to effectively finance infrastructure project. In 2016, for the first time, the government issued saving Sukuk, which is a kind of retail Sukuk with a 2-year tenor and non-tradable. In 2018, Indonesia issued the first green Sukuk in the global market. It has quite a success for tapping 29% new green investor frequent and also after 2018 we issue frequently for green Sukuk in the global market and with the tenor 5, 10 and 30 years. Continuing a tradition of bringing the to market of launching landmark green Sukuk, and government continue to issue green Sukuk in the domestic market with call retail green Sukuk to tap the new investor, the diversify investor, which is for the green retail Sukuk. We can tap more and more participation from millennial generations, the younger generations. You know that for the millennial generation now shifting their mindset for green lifestyle. So that one is a good thing. So since 2009 and until now, we issue frequently every years. And this year we will issue on end of October to November first week. And since from your left hand side, Sukuk Negara total issuance within 14 years, we already issue 2,125 trillion IDR with outstanding of 1,257 trillion IDR. And the market share compared with the conventional and Sukuk of sovereign securities, the portion of Sukuk is about 19.7%. Next, please. Here I will show you Sukuk Negara infrastructure and market development. In terms, we got not only in terms of legal infrastructure, we got not only a strong legal basis and regulatory framework, but also we get full support on Sharia compliance from the National Sharia Board Indonesia Ulama Council to provide fatwa, Sharia opinion, and we regularly do discussion technically to improve our Sukuk and to make innovation on Sukuk in the future. In case of structure development, the issuance of Sukuk Negara instrument is supported by the development of 4 types of Sukuk structures, namely Ijaroh sale and leaseback, Ijaroh asset to be leased, Ijaroh al-Khadamat, and Wakalah. A complete market infrastructure has also become one of the supporting aspects of Sukuk Negara. There are 3 types of issuance methods. We have private placement, regular auctions every 2 weeks, and also regular issuance for retail Sukuk through book building. A year we issue 3 times for commercial retail Sukuk and 1 for social Sukuk retail. Next, since January 2020, the primary dealership system for Sukuk Negara and benchmark series has been implemented and brought some good impact, which are maintaining the demand for Sukuk Negara auctions, creating a transparent price discovery method, increased price competitions, hence lowering the cost of borrowing and increase the transaction activity of Sukuk Negara in the secondary market. So we can see that the implementation's primary dealership system and benchmark series have supported the competitiveness of Sukuk Negara yield in the secondary market. In terms of the management of Sukuk Negara, the availability of supply of tradable instrument is one aspect that support the increased liquidity in Sukuk Negara. Therefore, the government of Indonesia continue to increase the share of tradable Sukuk Negara issuance from year to year. Over the last 4 years, the activity of Sukuk Negara in the secondary market is in an upward trend, indicated by the increasing number of average daily trading frequencies from 2019 until 2022 year to date. Next, please. Government of Indonesia continue to do innovation and creative financing through Sukuk Negara. In 2013, we issue Sukuk for the purpose of project financing Sukuk. Project financing Sukuk, Sukuk that are issued to finance government project directly, or we call it earmark. From 2013 until 2022, 22, Sukuk Negara financed many infrastructure projects such as road, bridge, university building, laboratories, railways, and so on, with a total budget of 175.37 trillion IDR, or equivalent to 11.8 billion US dollar. Secondly, on the innovations is we call ASPN, online retail Sukuk. So now we issue Sukuk for retail through online system. So again, that one is a tap new investor for millennial, and now the millennial investor reach more than 51%. And the next innovation is Green Sukuk. As I mentioned, since 2018, we issue Green Sukuk in the global market and consider as the first Green Sukuk in the world. And we continue issue frequently every years. The recent issuance in June 2002 with total issuance 1.5 billion US dollar with tenor 10 years. But for the 2021, we issue Green Sukuk with tenor 30 years and grab more and more new green investor, and the biggest one is about 57% of the new green investor. And the latest recent innovation of Sukuk in Indonesia, we developed cash wakaf linked Sukuk. The government commits to supporting the development of social investment and the development of productive wakaf in Indonesia. Cash wakaf linked Sukuk is mainly designed as an instrument to support the productive wakaf development through the utilization of cash wakaf investment return for establishing newly asset creation of wakaf and financing various social activities in society. Next, please. Based on the recent favorable trend, the Sukuk market is likely to expand more in the future years. The increasing acceptance of environmental, social, and governance (ESG) investment by investor, business sectors, and government has created a potential opportunity for Sukuk issuers to incorporate these trends. The government currently working on further integrating Islamic social finance and commercial finance through the digital transformation of cash wakaf linked Sukuk. Indonesia currently has enormous potential for the financial market. Indonesian capital market investors are dominated by the millennial generation, as I mentioned before. The millennial generations age less than 30 years, with the number reaching more than 50% of the total current investor. And you know, it has increased significantly year to year, and this is a big opportunity for the Sukuk Negara issuance. We also making effort in the context of Sukuk Negara issuance, infrastructure development, and market deepening. For instance, enhancement of the obligation of Sukuk Negara primary dealers in the primary and secondary markets by the Director General of Budget Financing and Risk Management regulations. Next, please. Yeah, that one is the last. I just want to show the project. Actually, the total projects now is more than 4,000 projects. The one is only part of them, a small part. We develop LRT Sumatra in Sumatra Selatan, short Sumatra, and then we also develop and build construction of Tomia Port. We also built Pulau Balang Bridge construction, Solongawi Toll Road, double track Cirebon Kroya, and then also integrated national tropical and environmental biodiversity economic facility. I think that's all what I can share to you. For further informations, you can get the informations from our website, and then from many media, and that you can reach there. It is time to put strategies and plans into actions. May Allah bless you all. Amin ya rabbal alamin. Thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Dear Sister Iwi, Rianti, mashallah, very positive information on the Sukuk, prospects in Indonesia, mashallah, especially Sukuk Negara, and its continuous development through innovations and practicality. Mashallah, it's really good news and very good to hear that. So now I will hand over to my dear brother also, Ustaz Arif. Silakan.
Thank you very much, Dr. Ahmad Rifai. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. First of all, let us thank God Almighty for His grace and favor, so we could virtually meet in this webinar for the launch of the 11th edition of the annual IIFM Sukuk report. And congratulations to IIFM. I would like to express my sincere gratitude to the IIFM committee who has organized this webinar, and to all of the participants, respected speakers, for allowing me to join in this important event. Let me start my presentation in a slide. Okay, next slide, please. Yeah, next slide. Okay, my presentation will be divided into, the second slide, please. Will be divided into 4 parts. Previous speaker, my colleague from Ministry of Finance, Ms. Dwi, has explained comprehensively about Sukuk development market development in Indonesia. So I would like to focus my presentation more on Bank Indonesia Central Bank experience in optimizing Sukuk as Islamic monetary instrument. First, I will start by elaborating a little bit on Sukuk development in Indonesia as a background, and then I will jump on the second part, explaining the Sukuk as Islamic monetary instrument, as well as using Sukuk for deepening Islamic interbank money market in Indonesia, and lesson learned and also challenges that central bank has to deal with. And I will end up my presentation by providing some takeaways. Next slide, please. Sukuk market at glance. So Sukuk as one of the Islamic capital market products in the Islamic financial system has been developing from time to time, consisting of government Sukuk, SBSN, and corporate Sukuk. In general, as explained by Ms. Dewi, Ms. Dwi, the share of Sharia government Sukuk is less than 20%. Majority of the total government bond is still dominated by conventional. The situation is more or less the same in the private sector, where the market share of corporate Sukuk is less than 10%. Sukuk market is dominated by government Sukuk or SBSN. As per June, the market share is almost 97% compared to the corporate Sukuk with only 3% market share. Nevertheless, I will say that I believe Sukuk still have much room to develop in Indonesia. Next slide, please. How this introduction to the Sharia monetary operation. Indonesia, as you know, that adopt a dual financial system where the conventional financial system operates side by side with the Islamic financial system. The conduct of the Sharia market operation is part of the implementation of the monetary policy strategy to support the achievement of the operational target of monetary policy in achieving monetary stability. So Sharia market operations are directed to influence the adequacy of liquidity in the money market and foreign exchange market based on Sharia principle. At the beginning of the development, as mentioned Ibu Dwi, in 2008, Islamic monetary instruments were still very limited with only government Sukuk and untradable central bank paper. It was only in December 2018, about 4 years ago, that Sukuk of Bank Indonesia or Sukbi was launched, introduced as a tradable Sharia monetary instrument. Since then, Sukuk Bank Indonesia or Sukbi become an instrument for deepening the Sharia money market in Indonesia. Bank Indonesia commit to develop Islamic monetary operation instrument by optimizing tradable securities, for instance, government Sukuk throughout outright transaction, Islamic repo or reverse repo, and Sukuk BI or Sukbi issuance. At the first stage, Sukuk Bank Indonesia or Sukbi tenor was very limited to only 6 months, 9 months, and 12 months. After 3 years of implementation in 2021, the Sukuk Bank Indonesia tenor was completed with the shorter tenor as 1 week to 2 weeks and 1 month and 3 months. Since then, Sukbi has become the most dominant Sharia monetary instrument in Indonesia. Inside of the central bank, for your information, day-to-day monetary operation is managed by Monetary Management Department, while the formulation of Sharia monetary operation and instrument is carried out jointly with Islamic Finance and Economic Department, where I belong to. Next slide, please. How is the more characteristic on Sukuk Bank Indonesia and or Sukbi? So Sukbi is a Sukuk issued by Bank Indonesia using government Sukuk and global Sukuk owned by Bank Indonesia as underlying asset. So Sukbi uses akad of al-musyarakah al-muntahiyah bil al-tamlik, which is a syirkah contract of 2 or more parties followed by the purchase of a portion of hissa by one party from the other party at the end of the contract or at the due date. So characteristic of Sukbi is, using government Sukuk, global Sukuk owned by Bank Indonesia as underlying asset. Unit is issued starting from 1 million rupiah or equivalent around $70. Tenor varies from 1 day to 12 months, even though now is only 1 week, but the regulation is permitted to 1 day. Scriptless and administered by BI, collateralized to Bank Indonesia, can only be purchased by Islamic banks, in the primary market, and so on. Yeah, and then the advantages is tradable. Yeah, it's tradable, and then also complete tenor in Islamic reverse repo, and also owned by BI, the securities. This is very interesting for the market. So SUKB or Sukuk Bank Indonesia is not only Islamic monetary instruments, but can also be transacted on the Islamic interbank money market. Thereby, its issuance also encourage the Islamic financial market deepening. Next slide, please. So monetary instruments for liquidity market management, yeah. In practice, Sharia open market operation instrument in Indonesia consists of absorption instrument and injection instrument. And for absorption liquidity from market, some instrument can be used is, for instance, Sukuk Bank Indonesia or SUKB, certificate of Bank Indonesia Sharia or SBIS, and Islamic reverse repo. On the other hand, for injection the liquidity to the market, Bank Indonesia use BI, Sharia Liquidity Management Instrument, or PASB, and Islamic repo. Since April 2021, Sukuk Bank Indonesia or SUKB became the main Islamic monetary instrument in Indonesia. SUKB continues to increase in line with the Islamic banking liquidity. Meanwhile, Bank Indonesia Sharia Liquidity Management or PASB become the main instrument on Islamic monetary injection operation. Next slide, please. To encourage the Islamic financial market deepening, government Sukuk and Sukuk Bank Indonesia or SUKB are also utilized in transaction and instrument issuance at the Islamic interbank money market. In Islamic interbank money market, bank can outright buy or sell Islamic repo or reverse repo, or use money market instrument with government Sukuk or SUKB as the underlying asset in the form of instruments called Sharia Interbank Liquidity Management Certificate or SIPA that is effectively traded from April 2022. Yes, Bank Indonesia is still in the early stages of implementing the Sharia monetary instrument in monetary operation, and we keep on reviewing and looking forward to have chance to learn from other countries' experience. Next slide, please. Now, let me turn to the lesson learned and challenges. Number one, we know that Islamic bank participation in Sharia monetary operation and Islamic interbank market are still low, yeah, from 12 bank commercial and 21 conventional bank Islamic business unit. Not all of them active in the Sharia monetary operation and interbank market. Number two, we know that Islamic windows liquidity management strategy is still relying on conventional parent banks. Yeah, yeah.
How are you doing?
And then number three, SUKB.
The IIFM. So I hope that's the only place I have to. Yeah. Anyway, see you
I'm
later.
sorry,
Inshallah.
Mr. Hatim. I'm sorry. The speaker. Sorry. Okay. Number three is the SUKB transaction in the secondary market are still low, since Islamic banks as the SUKB holders and tend to hold to maturity. And the challenges, the possibility of utilizing corporate Sukuk or commercial papers as the underlying of SUKB or other Sharia monetary operation as implemented by other central banks. This is something that was still a challenge for us. So let me ending. Next slide, please. Although the development of Sukuk remains at the early stages in Indonesia, we are optimistic that Sharia economy, including the Sharia finance, is having the momentum to accelerate in years to come, not only because Indonesia has a majority Muslim, but also the advantages of Sharia instruments is much more better off compared to conventional ones. Before I stop my presentation, let me emphasize some takeaways from my presentation today. First, the government Sukuk is not only a fiscal instrument, but can be optimized as the underlying of Islamic monetary instrument by the central bank. This is one of the form of monetary and fiscal coordination. Number two, both government Sukuk and Sukuk of Bank Indonesia can be traded in the secondary market. This is means Islamic financial market deepening. And number three, considering the potential market, continuous effort still needed in developing corporate Sukuk in Indonesia. Once again, thank you very much for your kindly attention. Warm regard from Jakarta, Indonesia. Billahi taufiq wal hidayah. Assalamualaikum warahmatullahi wabarakatuh. Thank you, everyone.
Waalaikumsalam warahmatullahi wabarakatuh. Encik Arif, terima kasih banyak. This is really, we thank you for this, mashallah, very excellent, informative, presentation on how the Bank Indonesia optimizing the Sukuk for interbank transactions. We hope to see more, inshallah, development, as I said earlier, and you also mentioned that being in Indonesia, the most populous Islamic, Muslim country, inshallah. So thank you very much for Mr. Arif, and terima kasih banyak untuk Kak Dwi Rianti. Inshallah jumpa lagi di Jakarta, inshallah. Terima kasih. So ladies and gentlemen, mashallah, it was very good and informative session, inshallah. Due to the well, shall we continue? We have 5 minutes break for people to refresh, or do you want us to just move on and finish it once? Any suggestion from Sejlal?
We have the speakers, inshallah.
So we have them. So let's just finish it once. Yeah. So
thank you very much.
Inshallah. So now our the final session will be on sustainable development goals and the evolving Sukuk landscape. And we have no one to handle this and to give us really, really good knowledge on this, other than our sister, as usual, mashallah, Sister Stella Cox, mashallah, always with IIFM and supportive of the industry. And we thank her for that. So without any further ado, due to the time, I will hand over to Sister Stella to introduce the speakers. Over to you, Sister.
Sheikh, thank you very much for your kind introduction. As we move on to this second session, can I thank again IIFM for convening this event today for the Sukuk launch, IIFM and its stakeholders, I should say, and also for arranging the excellent session and presentations that have preceded us, which were extremely interesting and reflected so much change and progress and development since last year. And I hope that we are going to be able to inspire you similarly with our session now, when we are going to speak about ESG and other sustainable factors, and we will look at those within the context of the evolving Sukuk landscape. I have this amazing panel to moderate of Talat Hussein, Dr. Hatim El-Tahir and Lilian Nafalha. I'm not quite sure. We are meant to have Mian Nazir as well. I know that he's had something urgent to deal with. I'm not quite sure if he is joining us. If he's unable to join us, then I understand that we will have a very excellent substitute in Mr. Ishmael Dadaboy, but I think we'll work into that as we get into the speakers. So indeed, I'm privileged to have been asked to moderate for this exceptional group of panelists, and they're going to offer you their expert and diverse perspectives on sustainable development and also the evolving Sukuk landscape. Actually, their individual and their collective business remits are so extensive this year that my job is an easy one as moderator. All members of this panel are senior practitioners in their respective fields. So this year, we're able to make our own transition, pardon the pun, within this session from academic and theoretical weighting of previous years to practical insight. So what I'd like to do to begin with is simply frame my opening remarks with a little bit of update on happenings in the wider sustainable financial market, so happenings globally, and perhaps reflect upon where a couple of those may have an impact or some importance in shaping our discussions today. It'll only take a few minutes, and then I'll pass on to those who are more informed, better informed than me, to speak about specifics to you. But our sector historically has been dominated by the activities of banks and financial institutions, and we have a broad global footprint. And within our markets, some may have been slower to respond to the sustainability call to action than others. And that's just fine, you know, in my view. I don't think we should beat ourselves up about that, because we have to work out what our role is and actually where our nexus is, what's our access point. However, as we've heard before, and from Mustafa as well, the recent rapid advancement in inclusion of sustainable and, let's say, ESG factors and perspectives in both conventional and Sharia compliant financial solutions, products and services is being reinforced by the scale of investor and consumer demand. And that's now prompting governments and financial authorities across our core markets to develop national strategy and policy, engage in developing their own taxonomies with accompanying regulatory and legislative standards. And whether they do that independently, maybe, or maybe they do it through alignment with other initiatives to set relevant global standards and guidelines for a more collaborative approach to maximize consistency in delivery and impact across the world. And this is timely, perhaps, because in January of this year, according to Bloomberg, sales of bonds in Europe whose performance would be determined by achieving sustainable targets increased sevenfold in just 1 month, accounting for almost 20% of Europe's ethical debt sales. If you contrast or compare that to 12 months before, looking at January 2021, it was only 2%. So that's a huge increase. Last year, the global private equity industry's assets under management stood at $6.3 trillion, with expectation that level will double within 5 years. And in a recent report, the Harvard Business Review wrote that this sector has reached such capacity that without its active participation and that of its portfolio companies, it would not be possible for society to tackle climate change risks and other major societal challenges effectively. So let's shift focus now to our core topic and to Islamic finance, where according to Fitch and others, the total value of our industry assets achieved certainly double-digit growth in 2021. It's moving towards $3.5 trillion. Informed forecasts are predicting continuing expansion and strong growth for us on the back of accelerating economic recovery in certain of our core markets, especially the GCC, which is benefiting from significant uplift in energy and related commodity prices. And we've heard about that already. So growth potential in combination with an already present healthy growth rate is further evidence of the importance of our industry sector, most certainly within our core markets in the GCC and Southeast Asia, but also more generally across the OIC. And we have reached the point that we can state with total confidence that without the active participation of Islamic finance, particularly the capital markets, those central jurisdictions for us are also going to be challenged in tackling climate change and addressing major societal concerns. So perhaps now is the time that we in Islamic finance, given our unique faith-driven approach to responsible financial practice and the creation of impact, have a real opportunity, a very real opportunity, to have our voice heard equally amongst our peers from other ESG and responsibly aligned financial subsets. Given our growth potential, our scale, and our existing capacity, perhaps it could even be argued it's our responsibility to take a lead as a significant force for responsible and sustainable financial practice, particularly in our core markets, but let's not limit our ambition. Let's look at what else we can achieve. So that's more than enough for me. I think it was just some sort of thoughts to open up the conversation today, but we can consider all of this further after we hear from the panelists. And each of them is going to open up with 5 minutes or so on a core theme or topic close to them and their practice, and also that we hope will be of interest to you. And we're going to start with Talat Hussain, Environmental Counsel at White & Case. Her practice is focused on environmental, social and governance aspects for over 20 years, and she's covered Americas, UK, Europe, Africa and the Middle East. Talat is a certified lead auditor for environmental management systems, and she's considered a trusted advisor on sustainable finance. And that encompasses green bonds, sustainability-linked loans, and innovative solutions for monetizing carbon credits, which is interesting. There's been quite a lot of that in focus in our markets at the moment, particularly over in Malaysia. Talat has taught trade and environmental law and regularly advises on corporate supply chain compliance, non-financial disclosure, sustainable development, and energy transition issues. I'll move on in the segments to introduce the other panelists afterwards, but first of all, Talat, if we could start with you, and I know that you're going to give us an introduction to ESG and demystify everything for us.
Thanks, Stella. Usman, if you can put the slides up, slide up, thank you. Well, I guess in addition to thanking you, Stella, I have to thank IIFM as everyone else, IIFM as everyone else has as well. But quite importantly, I'd like to thank Dr. Levy for raising the question that nobody really knows what ESG means. And as Stella said, hopefully I'll try to demystify it a little bit. And I'm not so sure I fully know what it means, but in order to understand the interaction between sustainable development and Islamic finance, I think we need to understand what the obligations and standards that define ESG requirements and their legal implications are. Because we hear the term ESG all the time, and it's gone from being 3 letters to being a noun, and quite rightly addressing ESG issues, whatever they are, vary across sectors, geographies, priorities of issuers, investors, financial institutions, project participants. So I put up this rather busy graphic to not only emphasize the complexity of ESG, but also to indicate how I look at ESG and how it challenges me on a daily basis. And I think that's one of the reasons why no one really knows what ESG means. On a most general level, ESG, so environmental, social, and governance, is a set of standards, actually, is a set of factors or metrics. It's both a measure in assessing the sustainability performance of companies or countries, and also it's an opportunity for corporates and financial institutions and countries to adjust to the shift in emphasis of the market to address stakeholder pressures for environmental and social sustainability. What you'll see here is that ESG is not a singular concept. It covers a 3-pronged approach to non-financial considerations, and it's no longer separate from financial considerations. It is clear that ESG factors have financial consequences, both positive and negative. Now, corporates and financial institutions are starting to look at ESG as an end in itself, using these criteria for their own agenda, committing to reduce impacts on key environmental and social factors associated with their own activities, whether it's an institution or a country or an organization. So you'll see here a broad set of environmental, social, and corporate governance considerations that can be used to create value over the long term. So the environmental criteria you see here look at how a company looks at its potential impacts on environmental factors, water use, waste management, air emissions. All of this is referred to as the environmental license to operate. It's usually manifested in an environmental management system. When you look now at the social criteria, you'll see how a company manages its worker rights, health and safety, human rights, supply chain issues, consumer protection, and community welfare. All of this is the social license to operate. And then you'll see the governance criteria. And in so many ways, these governance criteria overlay environmental and social as well. They reflect on both of them, but focus on leadership, on corporate structures, on executive compensation and internal procedures. Basically, corporate accountability in the environment for environmental, social, and other sustainability related topics. So it's no longer linked only to reporting requirements for public companies. In this era of emphasis on governance, it's about good governance and the emphasis on the social and environmental aspects of it. Although we're looking at this wheel as it is, we can't really talk about ESG and sustainability issues today without looking at one of the more significant issues that's actually been quite a focus, quite a driver of ESG, and that's obviously the COVID-19 pandemic. It actually created a much sharper focus on ESG, and in particular on the social aspects of ESG. It was definitely a wake-up call for better and broader corporate risk governance, including managing security issues and employee health and safety issues. And it has also created something that sometimes the markets have been resistant to, which is a significant growth in government command and control measures to address environmental, social, and governance-based policy objectives. And governments have taken that on, in addition to their commitments to achieve the UN Sustainable Development Goals, they've taken that on in great strides. Usman, if you can turn to the next slide, please. So this is just a representation of the of the Sustainable Development Goals, which we've talked about. I think Dr. Levy also said that he is looking at ESG more as Sustainable Development Goals rather than ESG. And I think that ESG factors are actually the ways in which Sustainable Development Goals are incorporated. So if you take ESG factors or metrics and you overlay them with the imperatives of carbon reduction, of clean water, of climate change adaptation, or the eradication of hunger and poverty, or the development of smarter urban sectors, areas, dignity at work, reduction of inequalities and quality of education, then ESG becomes a sustainability issue where sustainable development is a global imperative that requires action. And that action requires political commitments, it requires regulatory infrastructure, and it requires financial institutions, financial solutions, and not just financial institutions. And that's what we're going to be talking about in detail over the next hour or so. So that is my brief introduction to what I consider to be ESG, and hopefully it has expanded all of our knowledge on what is ESG, although not perfected it. Back over to you, Stella.
Thank you, Talat. Thank you very much. We'll move on. I'm just checking, actually, in terms of next panelists who we have. Dr. Hatim, do we have you available? I know that Dr. Hatim is actually in the wilds of Cambridge in the UK at the moment, probably using a mobile device. So hopefully he will connect in a little bit later.
Yes.
Dr. Hatim.
Hi, good morning. Yes, I'm very much here.
Okay, wonderful.
Thank you.
Just checking that you're there. I think we'll move to you next because I think your remarks are going to dovetail very well with Talat. I'll just introduce you briefly, although you need no introduction. You are director at Deloitte's Middle East Financial Services Consulting Practice, and you lead Deloitte Middle East IFKC, which is a global center of excellence, and it's an Islamic finance think tank. And in your role, you're leading the regional coordination of Islamic financial advisory services at Deloitte Middle East and working with leaders in the Deloitte Global Network to strengthen Islamic financial advisory leadership position. And your personal experience in providing technical Islamic financial advisory and Islamic financing regulation professional services to clients in the Middle East, Africa, and Asia is undoubted. You've worked in industry as well. You worked for NASDAQ Dubai in a senior role in the past. But I think how we know you is as a very strong advocate for a greater role for Islamic finance as a catalyst of social and economic inclusion. And you write regularly on the cause and also on ways to adopt best practices of ESG and how to help strive to achieve and deliver against the targets and objective of the UN SDGs and community developments. And however you want to describe them, whatever the nomenclature is, I think that the key thing here is that you're working for impact, and most of the members of this panel have been engaged in your initiatives in previous years. Now, Talat put up her diagrams and again demystified some of the aspects of ESG and how it fits into other sustainable initiatives. But I think we're all aware that there are challenges in actually getting to grips with finding an access point or finding a way in which to develop a process and a procedure. And you're going to speak to us about challenges that public and private sector organizations and firms are facing in actually developing policy and creating frameworks and guidelines for sustainable and responsible financial practice. I think we've given you about 5 minutes, and it sounds like a 5-hour topic. But please, Dr. Hassim, do your best. And if we lose you visually or whatever, we'll know why, because you're sitting outside somewhere. But we'll look forward to your remarks.
Sure. Thank you so much, Stella, for putting the context on this interesting session, and I hope that my contribution will add some of the demystifying points that Talat was nicely also explained to us. Well, again, before I start, I wanted to thank the IIFM leadership and the team and congratulate them for the launch of the new IIFM Sukuk report. Now, coming back to your point, Stella and Talat, and I think from also practitioners' perspective, we have identified some key challenges that corporates and governments are facing in developing their policies and frameworks to incorporate their strategies and their sustainability strategies and ESG financing and responsible financing, I would say. So, Brother Osman, if you could just turn to the next slide, please. Thank you. We have summarized the key main challenges in 4 fronts, and obviously addressing the first question that Stella put for all of us, and Talat was trying also to to explain, is that the industry and corporates and governments first and foremost need to have a proper awareness strategy and culture within the organization. What we mean by this that leadership at the corporate and government entities level should make and have a proper awareness within the executive level boards and get their buy-in to ensure that sustainability is embedded in the overall company or bank or government authority or entity, and their performance and their operating efficiency and operating business models. Sustainability should be formed as part of the organization strategy framework, and that's really an important part of this culture. If you like, and has to make sure that there are some kind of alignment within the executives, as well as the traditional business processes need to be added and adopted to the strategy, building capacity and awareness on ESG financing product solutions, and what are the regulations and compliance needs. And coming to the regulating compliance also, another important area of challenges for corporates and Islamic banks, or including Islamic banks, is the risk and compliance. There is an increase in sustainability requirements and guidelines. However, we need, and I will probably talk about this in the second run, about the role of the industry standard setting bodies and associations in this respect. But obviously, risk and compliance is a key important area. Sustainability and strategy governance, obviously achieving the regulatory compliance part, update the operation models as needed, whether it is an investment bank or is a commercial bank or is it a careful company. However, there are different aspects of sustainability and responsible financing aspects. And needless to say that overall is to update the code of practices and code of conducts, policy documents and procedures within the organization. And finally, coming to your point, Stella, which you emphasized a couple of times, is the processes, the reporting part, the assurance. And I think Deloitte, as well as other advisory firms, are doing a great job in the sense that they're developing good practices and guidelines when it comes to the developing sustainability and reporting strategies, measuring KPIs and metrics, how to develop these and embedded these kind of strategies within the overall business strategy of the company or the organization. Relevant tools of technology, obviously with the digitalization and technology advancement in all aspects of our businesses, there has to be also some kind of alignment between these reporting and technology and digitalization of the reporting processes. Updating the investment policies and procedures, of course, is a key area. So just to conclude on these challenges, I think the key word here, or the key point, is the integration of sustainability and ESG strategies within the overall company-wide or bank-wide or corporate-wide overall strategy, and ensure that there is the buy-in of the boards and executive management in one level, ensure that there is enough education and cultural awareness within the organization about how sustainability, ESG, or sustainable development goals can be aligned to the business processes of the particular sector or business that the company is in, and ensure that the risk is also embedded in the risk governance part, and finally update the policies and business model to ensure that we have reports and we have MIS reports, in other words, that will reflect how and to what extent the organization is making an impact on that sense. And I'll stop at this point. Happy to explore more on this, and if there is any particular question from the audience. Back to you, Stella.
Thank you, Hassan, and we will certainly come back to you, and some interesting points made. And as we've been emphasizing already, actually for an industry that is an industry sector that is already recognized by other ESG financial industry subsets as being part of its own, and I think for reasons we'll talk about later, Islamic finance could very much claim to be that. It is still challenging to find the right access points, and obviously your comments were made from public sector and larger institutional approach. But I know, for example, when we were putting together what we call our sustainable responsible actions pillar at DDCAP, which we started some years ago, it was actually trying to find the right reference points and the right organizations and the right guidance and the right industry bodies that were relevant to us and our client expectations. And I think one thing that we should do is acknowledge that within this space that we are looking at the potential of aligning with, there's not an awful lot of prescription. There are very different and individual approaches, and everybody is trying to bring these approaches back together so that we can get some sort of collective or some sort of consensus on the best way forward, which is difficult when you're working across borders, legislation and regulation. But again, it's going to be central to maximizing our impact. So we'll pick up on that again later. But now we're going to move on. And as I mentioned at the beginning, we should have had Mian Nazir with us, who's head of internal Sharia control at Dubai Islamic Bank. Unfortunately, he's been called away very urgently. He didn't expect that, and he sends his apologies. But we have instead a very excellent substitute in Mr. Ismail Dadaboy. Now, I don't have detailed bio information to give to you, so I will give my own. Ismail Dadaboy, investment banker, structural innovator, tech entrepreneur, and advisor to industry. Thank you for stepping into our panel at very short notice. And I would also say friend and colleague of many decades, if you don't mind me meeting you as I have done myself. You're going to speak to us at the practical aspects of originating and issuing ESG factored Sukuk.
Good afternoon, and thank you very much, Stella. Yes, we have been together for a number of decades, and thank you for the friendship as well. First of all, I think I would like to stress the fact that my vision of ESG was pretty narrow till Mr. Talal basically gave us a full circle as to what it encompasses. So there are different elements to it. Surely it is a buzzword, but certainly not many bankers are aware of it. And they keep hearing this, but we need to now take it to the next level. From a Sukuk issuance point of view, I think the government needs to take a lead. Indonesia and Malaysia is doing good job. We've seen some corporates in the GCC market come and did something, and I think we need to take it to the next level. However, the issue that we need to address is one, what encompasses or calls a Sukuk sustainable or ESG? That needs to be defined. And I think Sister Talal did a very good job in identifying what ESG means. So we need to look at that and educate the issuers as to what this means and how we can take this forward. From a Sharia perspective, ESG, green, SRI, they're all very, very much Sharia compliant in the sense that it is part and parcel of Islam. We need to protect our society. We need to protect our environment. So all of this makes the Sukuk a perfect way to go forward. And I think we should now take the lead. Obviously, the conventionals have taken the lead on this, but now I think we need to come in and basically grasp the element and bring the Islamic element as well and take this forward. The other issue that I think many will face is how do we ensure that once the Sukuk is issued, that the elements are maintained and reviewed on a continuous basis. The Sukuk could be Sharia compliant, could be ESG compliant in year one when it is launched, but how does it continue afterwards? So I think that's an element that we need to look at and see how that could be addressed. So the first element is identifying what ESG is or SRI is. Can a corporate or a government consider issuing that? If so, let's bring that together. The next element is to bring in the review system as to how and which entity will review this, number one. And number two, what are the cost factors in reviewing that? Obviously, we don't want to have a situation where the cost of reviewing takes a big chunk and it basically makes it uneconomical for the Sukuk to be issued. So there are a number of elements that we need to consider, but certainly from a Sukuk issuance of this ESG, green, SRI Sukuk is a must, and I think we should take lead from what Indonesia and Malaysia is doing, and bring in that element not only to the GCC world, but also take it across the globe. So GCC is a prime where we can start off with, and the next step is to basically take it forward. Obviously, my involvement currently on the ESG front is limited, but I'm fully committed in helping and developing this initiative. It is key to our industry. It is key from an Islamic point of view. So I will be happy to take some questions later on, but let's start off with this.
Thank you, Ishmael. Points well made, and particularly I think that in furthering this initiative, and there are various targets and benchmarks and achievements that we're all working towards that have been set internationally and locally, and we have various global accords. So in understanding them, I think what you said resonated a lot, that we need to be fully committed. So we need to understand them so that we can be fully committed, and we need to acknowledge that we all have our role to play, and that means getting beyond the institutional market and getting into the SME market and using institutions to make sure that they educate and make the SME market aware, because after all, across many countries in the world, SMEs are the backbone of the economy. So I think it's a collective initiative. But before we drill down further into that, I'd just like to move on to introduce Lilian Lafalha, who actually needs no introduction. He has more than 25 years of experience of corporate investment banking, and we all know him as a member of the executive management team of Kuwait Finance House in Bahrain, where he heads wholesale banking activities, treasury, capital markets, and FI. And he served on the board of LMH, a wholly owned subsidiary of Kuwait Finance House in Kuwait. His mission was to focus particularly on the primary and secondary Sukuk market for KFH. Representing KFH, Lilian's a board member of the International Islamic Financial Market. He's the chairman also of the executive committee and has contributed to the development of various Sharia compliant structured products and investment schemes. He's a visiting teacher of Islamic finance at the University of Paris Dauphine as well. Lilian, you're going to speak to us and give us some insights from literally your work as a market practitioner. And you'll give us some buy and sell side perspectives, please, on green and sustainable Sukuk.
Yeah, thank you, Stella, for the long introduction. Just before I start actually with the buy side and the sell side, just wanted to recap a little bit what we've heard before on the market and where we're going, just to understand a bit like how the ESG, which is a sub-segment of our Sukuk market issuance, will stand and how it can benefit from the dynamic of the Sukuk market. Back in 2021, there was a long presentation by IIFM and fantastic job being done on their Sukuk report. 2021, it was said already, was a record year, but definitely we're going to see 2022 with issuance drying up. Many factors for that. The three main factors is the higher rate environment, which is impacting any debt capital market. So Sukuk is not an exception to that. The second one is the volatility in the market, which is putting on the side some of the issuers and not really sure of the right time to issue. But more importantly, also is the energy crisis, which is on all the headlines in Europe, and that we all know what's going on. And this high oil prices and gas price is a great benefit in a way for our region, the GCC. And as a result, we see the GCC having a surplus and a surplus on fiscal surplus, which pushed them to put some kind of brake on more issuance. And as we all know, the governments are one of the main contributors to the Sukuk issuance. So as a result, we see a sell side going down. We see the forecast for the year is around $150 billion, probably not exceeding $150 billion compared to 180, 190 last year. So we end up with a market which is drying up a bit. Now, at the same time, and that's where I come for the ESG. At the same time, you see on the buy side a very strong demand from for two main factors. The number one is the international demand that you see on the Sukuk, which is not necessarily on the Sukuk only. It's on the overall GCC debt market, because GCC is definitely seen as a kind of safe haven if you look at emerging markets where you have inflation which is relatively controlled, where for obvious reason you have a lot of surplus, as I said already, in terms of liquidity. So we definitely see a lot of international investors coming to our market. And you have also the traditional, I would say, or what we see year after year, the local demand, which is very strong from Islamic banks, wealth management, and asset managers. And as a result, you actually see in the market today a price distortion, which in the past was in favor of issuing conventionally rather than issuing a Sukuk. But today it costs you less to issue a Sukuk, and you can actually benefit from a better pricing for you as an issuer to go the Islamic way rather than going conventionally. And you can see it even in the secondary market, where you see sovereign issuers, the traditional one. You can see Bahrain, where I'm sitting here, being actually the Sukuk for the same tenor of Bahrain government being 1% lower in terms of yield. You see it in Turkey also, where the Sukuk, the Turkish Sukuk, is also 2.5% lower in terms of yield, from 7.5% to 10%. We see it also in Pakistan, where similarly, I mean, the yield to maturity of the Pakistan Sukuk is going to the roof on the bond market, sorry, and on the Sukuk it's relatively less. So we end up by having a lot of issuers having a strong incentive to come to the Sukuk market. So after this relatively long introduction on the overall market dynamic, when you look at the ESG, there is a strong incentive for ESG issuers to come to the Sukuk market because of pricing, because of appetite, because of the strong buying and demand that you will see on the issuance. And also, it was said by Brother Ismail, and by other speakers, by the natural fit you have between the ESG principles presented by Talat and the Maqasid al-Sharia, the principle of Sharia, which there's a lot of overlapping, to say the least, and a lot of common things to share. Now, on the buy side, who are the buyers when it comes to Islamic debt, to Sukuk market, on the Sukuk market? Contrary to the conventional fixed income, on the conventional fixed income, you see a lot of fund managers, a lot of pension funds, a lot of insurers, where when you look at the Islamic market, it's the Islamic capital market, it's mainly driven by banks. And that's a huge difference, and I think it explains why ESG is lagging a little bit when it comes to Islamic capital market, is because there's no clear identification of ESG component in banks. It might happen, and I'll give an example later on, but compared to some asset manager who are dedicated for ESG, for green finance, who have to find assets. So there is a very identified demand for this ESG conventional assets, which does not necessarily exist in the Sukuk space, sorry. And that's really a huge difference, which explains to me why you see, you see some issuance coming up from sovereign issuers, but not as many as you can see on the conventional markets. KFH Group ourselves, we have an experience actually through our subsidiary Kuwait Turk Participation Bank in Turkey. We issued a sustainable tier to Sukuk, the first of its kind. It got a lot of prize, including the best deal of the year for 2021. It was a relatively short, a small issuance of $350 million. It was, overly subscribed 12 times. We had a $4 billion book. And when you look at the investors, we have more than 100 investors, but only 20% were actually green or ESG investors, if you may say. The rest was actually the regular demand of people looking at the credit of Kuwait. And that really tells you a lot about, as I said, the identified demand. You don't really have a strong identified demand when it comes to our space of the Islamic capital market. And when it comes to the sell side, it was also said, because the first panel spoke about the issues also a little bit. On the sell side, you see two types of issuers. You have the likes of Kuwait Turk Participation Bank, Majid Al Futtaim, or some others will start having some, and it was described by Dr. Tahir, some kind of self-imposed. No, sorry, there was a question. So I was saying there is some kind of self-imposed criteria when it comes to issuing your debt, and people are looking at issuing in a sustainable way, and that was the case of Kuwait Turk. But the main driver has to be, and it was said by Brother Ismail, has to be from the sovereign, and we see it today. I think it's part of your report, Ijlal. There is roughly $20 billion of outstanding ESG Sukuk. The vast majority of it is coming from just 3-4 names who are sovereign or supranational, being IDB, being Malaysia and Indonesia as country. And you see that's roughly 2% of the outstanding Sukuk issuance. It might look very small, but at the end of the day, when you look at it, it's the same thing in the conventional world. You're talking about also 1 or 2%. So my point is that here, when you look at, it's a bit unfair to try to be hard on ourselves and say that we're not doing enough. We're definitely not doing enough. But I think there are, it's actually something which is common with the conventional world. Now, the reason why I'm a bit upset of not us doing enough is because to start with, maybe my just few words of conclusion on the 5 minutes you gave me, which is probably a bit more than 5 minutes now. But the conclusion is that we should almost, and it's a personal remark, but we should not necessarily need to be ESG stamped as Islamic issuers. At the end of the day, if we do believe and if we do follow the Maqasid al-Sharia and the principle of Islamic finance, it could be virtually every single issuance coming as a sukuk will be very close to the ESG principles. So it goes back to your initial remark, Stella, where there is a fantastic opportunity for Islamic finance to commingle with the ESG world, with one small kind of drawback, I would say, or question mark, which is a bit, I don't know how we'll call that. I mean, if it's a challenge or if it's a kind of contradiction built in our industry, is that our industry has been based mainly, we keep saying it, on few key markets, including the GCC. And the GCC is highly dependent on oil revenue. And as you all know, some of the ESG coming more, the guys who are on ESG criteria, which are not necessarily always standardized, some people are excluding oil and gas industry from their criteria of investment. So I don't know how we can cope with that, with our industry being really embedded with and our wealth and the prosperity you see in the GCC is definitely linked directly to the oil and gas industry, which is not necessarily compatible with the ESG criteria.
Stella, a couple of points I want to take up on what you mentioned, what Brother Lillian mentioned. One is you talk about the SME issuing ESG sukuks. The issue is going to be SMEs, in theory, are small, and trying to do a sukuk when the market is even not there now for SMEs to issue sukuk in the international market. Maybe domestically it is possible, but they are the one who will quickly adopt. SMEs will be quick to adopt the ESG because they will value it and they can see the benefit. So I agree with you, the SME is an angle, but in the international market, I think that could be a question mark, number one. Number two,
if I could, just before number two, if I could just respond on that. I didn't mean to infer that I was putting out a call to action to SMEs to start issuing sukuk. I was thinking more from the fact that SMEs shape their approaches now and have different considerations, so that actually my thoughts were perhaps in the future having sustainable, responsible governance within an industry, within an organization, be it small or large. And I was looking at Talat's wheel and thinking, you've got to start from the bottom up. You need to get the companies looking right in the first place. And actually, I think Scott was talking about this in the earlier session as well. And there is a platform in Al Wasila that is very focused on this. And Scott was putting out the cry, for more corporates to issue. So I was sort of thinking about what do firms need to do from an infrastructure perspective to make sure that they will be eligible. I don't like to use that word, but I think that sort of vision forward is something that's really important nowadays. And it's going to be really tough for them to do it. So to an extent, financial institutions, banks, have a role to play alongside the advisory boards in making sure that that practical orientation is there. I'm sorry, I interrupted you. You had a second point.
Oh, I agree with you. I agree with you. Yeah, the second point is basically education. I think it's very important that we get the education out to the market, especially the issuers or the people, the bankers or the DCM people. When they talk about ESG, talk about sustainability, etc. Not just straightforward Sukuk, and see how the Sukuk issues can be brought into the ESG world. Number two. Number three is what Brother Lillian mentioned about we are oil-based industry in this part of the world. True, but there are initiatives going on. For example, we've got lots of solar panels being put in by the governments. Those could be form part of the ESG Sukuks or green Sukuk, etc. So there are various elements that one can look at. The other element is basically the trains which are now coming in, which are not using coal, for example, or using electricity. Maybe they can be then going forward become with an EV type, then that could be another angle to look at. But certainly, I think ESG needs education. And that is what we as bankers and we as DCM people needs to portray in front of our clients.
And Stella, if I can further interrupt Lillian's presentation, just to address the challenge, the last one he mentioned, there are opportunities for transition financing. So I think that one of the things that the market the GCC countries or the Islamic finance markets need to look at is methods of engaging in transition financing. And to your point, Ismail, there's many parts of my ESG wheel where you can actually find those areas. And in particular, if we look at sustainability linked instruments, they actually require KPIs. So there's something that we're trying to achieve in ESG. So to your point, Lillian, and I totally agree, it's a challenge. Which needs to be educated and needs to be investigated. The ways in which we can use transition financing and sustainability linked financing to actually get KPIs that move oil and gas, and these coal economies have the same issue. And look at Poland. I mean, they issued a green bond, an 100% coal-based economy, and it too in the time when it was done now 5-6 years ago was 5 or 6 times oversubscribed. Their goal was to create green projects to not offset the coal-based economy, but to accommodate the environmental needs of the country. So I think there are KPIs that can be developed and sustainability linked instruments that can be developed to try to achieve transaction financing and meet one of those big challenges that you're talking about. And even with perception in the market being what it is for oil-based economies, I'm very optimistic, just to be sure.
There's some good points to that. Actually, recapping, Lillian, you've obviously set the world on fire here with your comments, because amongst the points that you made, the Islamic finance sector recently has seen noteworthy green and sustainable Sukuk issuances. We've seen benchmark size. We've seen significant oversubscription. So the demand for green assets is accelerating across the conventional sector, and it's serving to increase appetite for green Sukuk as well. I'm using green in the very broadest sense before somebody shouts and says not everything is green. And you can tell from this conversation now we're looking at economies that have different drivers and how we innovate and structure our instruments. So appetite's there from Sharia compliant investors, but also we've got this return of conventional investors who are actually looking to diversify into the core Islamic marketplace or Muslim marketplaces for different reasons. So that's eliciting a response from Sharia compliant issuers as well. Looking at approaches and noting the remarks about fossil fuels and so on. COP26 last year, which took place in Scotland, I think was notable, amongst other things, for the fact that there was a real embrace of the notion of transition and the fact that not everybody can get to be entirely green in one step. And in fact, in trying to compel everybody to do that, you are probably causing and presenting an awful lot of other difficulties as, you know, firms are cut off from investment, markets are cut off from funding, and so on. So I would say COP26 embraced the notion of transition finance. Lillian, what impact do you think that is going to have in terms of business acceptance of a path to green, particularly in the GCC, where there has been sensitivity around the drivers of the economy and the ability to raise funding? And do you think there is going to be a step change as a consequence of this embracing of transition within the GCC and the wider OIC? You're on mute.
Yeah, sorry, I was on mute. Yeah, there's no doubt that, I mean, the world is fully interconnected, and the GCC countries and GCC government are really pushing hard to make sure that there are good students in the overall class of the world, and looking at and trying to look good in terms of and they have been committed. Many governments have, it was already said, have been committed to net zero emission with some target. I'm just personally believe that there is also some, and it's not the GCC only, I think there is some kind of lack of ambition from the different countries. And a lot of things are said during the COP. There was one back home in Paris, COP21, where a lot of things were said. And we are now COP26, 27. It's going to come 28. It's going to be in Dubai. And many things have not been yet done. And if you take the emission, they have been continuing increasing, actually, where there was some clear direction given, and everybody was very happy of the decision taken in the COP21. So without being the pessimistic French guy on the panel, I just want to say that, I mean, that there's a lot of things which are said, and there's a lot of things who are, you know, people are committing, and they are with words you can commit. But when it comes to the hard reality of, and especially with the volatility, the geopolitical volatility, you see the energy crisis you see in Europe, you see a lot of people trying to be pragmatic when it comes to these issues and green issues and transition and all this. The GCC has a fantastic opportunity to compare to other countries because they are sitting on a lot of energy, so they won't have any energy crisis. They are not dependent of Mr. Putin giving them gas. So definitely they can do a lot without the pressure that Europe may have. In Europe, you see people, despite the commitment they have been doing, they have been taken during the different COP. You have seen European countries start reopening some coal, some coal-based plants to have energy because they're just running out of gas. So I mean, you end up by having a combination, I believe, of the willingness of the GCC countries to always show to the world that they can do a lot and very nicely. I mean, we have seen it in many occasions, from the Qatar World Cup to the Expo in Dubai. They're trying always to impress the world. And I think on that dynamic, which sometimes might be seen negatively, could be a positive thing actually for the environmental issue. And no doubt that the COP 28, I believe, or 29 or 28 will be in Dubai. The one before will be in Egypt. So the Middle East is going to be in focus. And I'm pretty sure that the UAE, at least, if not the broader GCC, will be very, very keen to show that they are doing good things. And they are already doing it. They have been issuing regulation. The government of the UAE have been trying to really push hard on these issues. In Saudi, you can see on the social networks, you probably have seen some of these videos of NEOM and the new city, green city and all this. I'm not personally very excited by the look of it and being all of us in one single city in a bar, but that's a different topic. But you can see that there is awareness and people are looking towards that direction. So definitely the fact that there is the world is accepting the idea now might be too late, but at least people are pushing towards this direction. There was a big wake-up call with all what's been happening during the summer with the climate that we have seen and what you have seen, Stella, in your office. I'm not sure if you have the AC, but with 41 in London, it was probably difficult to live there. I mean, all of this have been a wake-up call for many people. And no doubt that the GCC, knowing them, have been in the region for the last 25 years, 20 years, definitely GCC will try its best to look good, and they are already started. They have already started. In Bahrain, we see the Central Bank of Bahrain pushing this agenda towards all the banks. Now the acceptability is there. People are realizing that yes, it's not something in 2050 or 2040. It's happening today, and we need to move faster.
Yeah, absolutely, I agree, and I don't think it's ever too late. But certainly to me, since COP last year, there seems to be a very different dynamic across the GCC. Of course, our friends and colleagues, and I spent some time with quite a lot of them yesterday in Southeast Asia, will point to the fact that they've been preparing their infrastructure for more sustainable approach through, in Malaysia, for example, through the Securities Commission for the Capital Markets, which is relevant to this discussion, at central bank level through Bank Negara with the values-based intermediation, and they will point to the fact that they've been doing this for some time. But I think that the dynamic that we've seen in the GCC has been rapid, and there is a lot of scale there that can drive this agenda forward very quickly. Dr. Hassim, I'd like to come back to you, please, if we may. And we've been looking at where we attach to different benchmarks, different targets, different objectives. For Islamic banks, the SDGs seem to have resonated quite strongly. And again, previous speakers were commenting about why they use SDGs as a clearer, more tangible reference point. I don't know, but we know that our industry sector has the capacity to mobilize funds to contribute towards, I think it's a $5 to $7 trillion annual funding target that needs to be satisfied, and it's probably larger than that now, to achieve the SDGs target. Now, the Islamic Development Bank's been a beacon amongst multilaterals in issuing Sukuk to align with SDG targets. So, Dr. Hassim, should we as an industry be working collectively to support that by fine-tuning our sustainability objectives and targets and looking to issue Sukuk that are very closely aligned to the SDG? And also, if you agree with that, what role do you think that our own industry infrastructure and standard-setting organisations should have in creating an approach that's specific to our needs and requirements?
Oh, thank you, Stella. I think
Gosh, that was a long question, wasn't it? Sorry.
It was a long perspective. I like that. No, I absolutely agree that the industry should have a role. Of course, now talking about the role of the GCC in the Middle East in hosting the COP26 or sorry 28. I'm not sure of the date, as Lillian was saying. I think it's a great opportunity for Islamic finance to prepare and align with industry standard setting bodies such as the WEFI, the IFSB, the IIFM, and supporting organizations like SIBAFI and many of these ESRA. They can do more on collaborative initiatives to put some guidelines to the industry, educate the industry. I mean, this word was recurring in this session. Education, educate your clients, educate your regulators, practitioners about what is ESG or SDGs, or how you link this and streamline this with Maqasid al-Sharia, the 5 key objectives of Sharia. So the answer is yes, more collective, collaborative work between the standard setting bodies, clear guidelines, and obviously more of educational awareness sessions. I think hosting the COP26 or 28, 27 would be a great opportunity. And I also think that events like the World Cup hosted in Qatar in November, and the Expo, and these commercial events could also be a venue for Islamic finance to align with them and take part, just to educate, the people, foreigners, and obviously coming from all over the world. I think it's a very commercial opportunity for Islamic financial institutions to use or to leverage these platforms. Again, we think that more of alignment between the industry standard setting bodies, of course, is needed. And we don't need to reinvent the wheel. We probably need to work with the already principles and guidelines developed in many countries in the likes of the ICMA. And of course, and I'm sure we all acknowledge the IIFM role in which you and obviously Talat and many other people have contributed to this initiative. And by the way, just saw Peter Casey, and he's sending his regards to all of you that he couldn't make it today. So interesting points. I'd like to hear from audience about how they see Islamic finance contributing to the advancement of the Sustainable Development Goals agenda. And then I'm sure that many of our fellow colleagues would have some points as well.
I'm just going to have a look at what's been sent in to us. Ishmael, I'd just like to finish on one thing. Hassan brought up Maqasid al-Sharia, and a lot of emphasis has been placed on examination. And I know within DD-CAT Sharia Board, we have one of our esteemed members is our champion for all matters SRA, and I try and sit with him and learn from him about matters related to Maqasid and the flow through to impact as well. I'll ask you a question which you might not be able to answer, and I was actually going to give Mian Nazir this question, and you probably won't frame it in the same way. But in your view, as a practitioner, should we be asking Sharia scholars to look beyond fiqh when they're evaluating a financial transaction? And I'm not asking you to say whether they should or not. Should we be asking them to? I think in the first.
We certainly should. We certainly should, Stella. Of course, they are very instrumental in approving products, structures, and solutions. However, and nevertheless, they also need to be also engaged in these kind of discussions and developing the right industry standards for these particular areas of practice, ESG and responsible financing. So the answer is yes, and I'm sure they will be welcoming these kind of discussions. They might have their own views, like what Brother Ismail earlier mentioned, or was it Lillian, I guess? He said, do we really need to have our products or solutions, whether it is Sukuk or any other, need to be ESG stamped or approved? I tend to agree that we don't need to, but also it will be good to use it as a guidance. Of course, it is a very good, standards, and then, why not use it? And probably if there is any way that we can add our more specific principles, and if we have anything to add, is why not from Sharia perspective. But yes, of course, Western corporate governance has always been on the lead. These kind of initiatives, whether it is ESG or SRI or SDGs, are always very good to compare and to benchmark and to look at as a role model to follow, and you add your own specifics.
Ishmael, what do you think on that point?
If that's need.
Thank you, Hassan. Ishmael, if you could just respond on the same point. Then I have a question from the audience that I'm going to ask Talat and Lillian about. So, Ishmael, your comments on the same point.
I think
before Haji Ismail says something, I would like to ask Sister Stella.
Thank you, Sheikh.
When you say to go beyond fiqh, what is the fiqh in your definition? What is the fiqh actually? What do you mean by fiqh here?
Okay, I think it is in simplest definition, because otherwise I'll take your kind attention and ask you whether we can sit down for 2 hours to think about this. So I think in the simplest form, and we have, I don't know, 120 people listening or something, what I am thinking is whether scholars should be moving beyond the more traditional considerations that they have around endorsing a financing or a capital market instruments to think about impact created in terms of wider world perspectives of impact. So let's just take this back. I think in terms of Islamic finance, if you look at the ESG factors, I think we all agree that we're weighted towards the S. In terms of social impact, in many ways, we are pretty good, Sheikh. But in terms of environmental and other governance considerations, maybe, and I'm not being disrespectful to anybody, but maybe we have a bit of catch up to do. So I think the question is, should we be including those sort of considerations? Is it relevant that we ask scholars? Is it indeed appropriate that we ask our scholars to think about whether some of the things that we think financially are for impact actually are?
May I say something?
Still, you didn't define
I think what she. Let me try just 1 second.
Please bail me out here. I'm the moderator. I'm being challenged.
The first thing is that, and Shir is always very defensive if you start saying that they should be. But my point is that, I mean, first of all, why should it be the Sharia scholars and why not us as practitioners to start with? And I think your question is around a debate which has been going on in our industry for ages and sometimes difficult to answer back. Some people who are criticizing Islamic finance is substance over form. And I think your question in a maybe more simple way of, and rather than using the big word of fiqh and having Sheikh Ahmed jumping in, I think it's as simple as that. Is it just we need to make sure that technically it's a good ijara and things are done properly and the sequence of event? Shall we look beyond that? And I think the answer to that is some Sharia scholars, and many of them do actually, they will look at the impact. Now, are they doing it on a systematic basis? Are they going to approve some Sukuk issuance or some financing which potentially could not meet the ESG requirements? Maybe they will. But my point is that certainly in KFH, I cannot talk for all the institution, but certainly in KFH, we go already beyond, our Sharia scholars will go beyond the pure technicality and form of the financing or issuance. But I think just to add something before I forget is that, I mean, when it comes to, we said in the past that just a few minutes ago, we said that there is overlapping, and what I meant, Dr. Hatim, by saying, shall we have this stamp of ESG? What I meant is not if we should have it. I'm just saying that if we do follow the principles and we do go with the form rather than or we go with the substance rather than the form on all our financing, we should definitely meet all the criteria of ESG in terms of social impact, in terms of making sure we are careful about our environment. Are we doing it, practically speaking, when it comes to, I have many examples that I want to point a finger towards some specific issuers, but there's many examples where Sukuk were issued and you could question the environmental impact of the financing that they took from the market. But certainly if we stick to our principles, the point I wanted to make is that if we stick to our principles, we could be very close to the ESG standards, which themselves in the West are not clearly defined yet. And so it's a bit of a, to me, it's a bit, we're trying to add these ESG standards in Islamic finance where they are embedded in our principles already.
It's
interesting.
The comments are well made, Lillian, because we are fortunate to have one of KFH scholars on our Sharia board as well. And I found it very interesting, Sheikh, as well. And hopefully I can make an appointment with you and I can come and I can give you my definitions afterwards when you have time, and you can tell me you can guide me where I am right and where I am not. But I have also found, because this question's coming up a lot at every event, the same question, and I'm very interested as a practitioner in hearing the different responses. But I have actually found that there is a lot of engagement already. And yes, to an extent there is some geographical impact as well, but I can certainly say from the perspective of our Sharia committee, because DDCAP's holding itself out as having sustainable, responsible alignments. And obviously we have to present our approaches, our transactional engagement, our tech and everything else. And we have not been told at any point this is not consistent or compatible, just picking up on Lillian's point. It's been just a two-way conversation to find out what we exactly mean in terms of, well, if you're saying it's, you know, it's SRI aligned, what do you mean by that, DDCAT team? So I think it's the same sort of opportunity to have a valuable and deep-rooted dialogue, but I think we need to be actually careful about what the actual outcomes of that, and I don't think we're going to have time to talk about the rest of it. I don't know whether I've got a few more minutes to ask this wonderful panel a question that's come in from the audience, which would be quite nice if we have. But in terms of this particular theme, you know, I was just thinking about what happens if Sharia scholars are asked to look more deeply at some of these non-traditional aspects and give opinion. How does that impact when we get to a situation when regulators and so on are looking at implications for key individuals within firms? But the question that had come in, and I don't like to leave it, so it's come in from Zulkari Mohammed Noor, and in a country where an environment where conventional bonds and ESG Sukuk both exist, do we need a roadmap for ESG that's not just for both, but do we need to have a separate focused roadmap for Islamic finance? So, you know, if it's both there, I think it's picking up on this issue of how our organizations and standard setters engage and collaborate. I mean, is it even possible? Is it in our best interest to diverge from global standards and practice? Salah?
So that's a complex question, actually. So there's the standards, and then there's the taxonomies. So not everything can be everything ESG, as you can see from my pinwheel. There has to be some sort of a focus in each one of these particular financings. And it's a really difficult task to create taxonomies that cover all of the environmental, social, and governance issues. Although the EU is trying, and some countries are trying to develop their own green taxonomies and social taxonomies. And I think that that's actually a bigger picture question for both conventional and Islamic finance markets. I think that what we need to do, I do think there's room for the development of separate taxonomies, but I don't think they need to reinvent the wheel for Islamic finance. I think that we can borrow from the taxonomies that are being developed and then contextualize them for their relevance in Islamic markets and focus on something in particular. I think that's one of the problems. We do put that lens of environmental and social responsibility through the Sharia compliance just because of the maqasid, but not something will fall afoul of that. So you couldn't have a 100% compliance without having a specific reference to some environmental or social taxonomy or standard that's specific for that financing. So I think that's one of the complexities that needs to be unpicked. I don't think I fully, I can't solve it, but those are my thoughts.
And it's a huge question. I think we have to bring this wonderful session to an end. So just a few closing remarks from me. I'll try and draw in some of the themes because I think it was a great free-flowing conversation. But I think the financial world now understands it has to be at the epicenter of what we call the net zero transition and involved in steering it. And approaches to global financial sector business have been irreparably changed by all that's happened. And within Islamic finance, as I put out there at the start, we have our own opportunity to increase our focus on promoting green and sustainable projects to help facilitate what we know is a just transition, and not just in our core geography. I think we can go way beyond it. And I think some of the remarks today emphasize that. But Islamic finance still needs to focus very clearly on how we, as a community, this time within the Global ESG Collective, organize our own response to this call to action. Definitely we have to embrace green and sustainable initiatives through our capacity, and we have this unique capability. But we are faith-driven, and we have to focus upon how we execute those actions and develop our policy standards and practices that align with global agenda that might not be. And we can bring our perspectives. Because we're faith-driven, we operate in adherence with Sharia principles. So the good news is that we're accustomed, Sheikh, to upholding the standards and complying with the levels of governance that has been set for us. We believe in sharing profit and risk, and we resist taking pure financial returns. We don't believe in taking unjust enrichment. So I think now we're looking to extend our approaches beyond our own well-established Sharia-based financial business codes and disciplines, and we're just exploring whether we can partner with others for good. If we are going to be a force, as we take our place within this ESG, SRI focused community, we have to bring impact through the scale of our contribution. And I think we appeal to the rest of the world because our increasing financial muscle, I'm sorry, that's not the most elegant description, but that's what it is not in question now. But if we're going to do this, we have to strive to ensure that we have the fullest commitment within our industry, that we have cohesion and awareness so that we truly understand what we're doing. But we can also bring our own customary focus on transparency, certainty, and clear and defined governance and validation to the ESG table. And I suspect finally that will also be very welcome because our prescriptive approaches, and I never call anything that we do negative screening because I don't think it is. I think it's something that is an approach to remove negative influence, but any other ESG subset that I talk to don't consider that our screens and our approaches are negative at all. They've long since been recognised and appreciated. So I think that we have something that sets us apart. So one word, final response from each of our panelists, starting with you, Talat, and moving along. ESG, SRI, flavour of the moment or here to stay?
Here to stay, that's 3 words.
Yes, actually, you can have 3.
Sorry.
You're welcome. Hatim.
Definitely here to stay.
Ishmael.
Exactly. 2 already said, I'll join them as well. Here to stay.
And Lillian.
It will impose itself to us. So I mean, no choice, but it will be here to stay.
Okay, thank you. Thank you for the extra words, because it's amazing how the responses have changed over the last 2 years. And it's another question that's often asked. Dr. Ahmed, I'm going to ask you next year if I'm asked to come back. But until now, I'd like to thank these exceptional panelists for their contribution and their commitment to the theme today. I would like to thank you, Dr. Ahmed, for actually engaging with the panel as well and starting to bring your perspectives. We would be honoured if you could join it next year. And I would like to thank IIFM for this marvellous event once again. Thank you very much.
Thank you.
Okay,
thank you so much.
Thank you very much, Sister Stella, for moderating this, mashallah. Very interesting, session and topic. As always, mashallah, performing well with these distinguished, speakers. But the takeaway of this, from my perspective, is that it is important to understand the Sharia objectives, what we call maqasid al-Sharia, regarding preserving the environment is well established in the sayings of our beloved prophets in the Noble Quran. It's well established. There's nothing that you should go beyond that, right? It's well established.
So therefore, Brother Sheikh Ahmed, it is important that we should engage the Sharia scholars so that they make sure that the preservations of the environment is there, and it is their role. And obviously, the Sharia scholars are also, endorsing financial reporting nowadays, and obviously a long time ago. So it will be interesting to see how this can be articulated in the sense that they should also approve if this particular sukuk or instrument is compliant with the environment regulations.
Yeah, I think it
So
shouldn't be a problem.
to be continued. Yeah.
I don't recall any scholar is
Yeah.
against this. This is my
Yeah.
first time to see some kind of saying that scholars should come, and,
Yeah.
with this ESG and
Yeah, I'll
SRI.
try and join that.
I think many of them are. I think shouldn't be a problem in my view.
Of course, no.
And I
Yeah.
don't know any scholar, against
True.
all this. Our takeaway today since morning
Yeah.
that Scott mentioned is that the difference between ESG, SRI, and all they are two different things. So the whole thing is about education. This is the main takeaway. The industry to understand what it means actually.
Exactly.
But the basic for
Thank you.
Sharia perspective is no issue at all. That's why I asked my dear respected sister when you say beyond fiqh, because the question is kind of not clear to me, because you cannot separate Islamic transactions with fiqh. You cannot do that. You cannot do that. It's actually based on
absolutely.
That. So when we say
so it is already
beyond
embedded.
fiqh, means we are entering
It
into
is.
different things here. It's embedded here. Right. That's why
Absolutely.
sorry, my respected sister asked me to define the fiqh. Maybe I don't know your understanding of fiqh. That's why I asked, because Islamic transactions or finance is all based on Islamic jurisprudence. Actually,
I think, brother, you have made it very clear. Thank you very much, Sheikh Ahmed. But still, I also subscribe to Stella's point when she said beyond fiqh. Maybe more probably accurately, if I may say, beyond the fiqh that's practiced now. We needed more Sharia involvement and engagement beyond the traditional fiqh in a way. Yes, to
that was
include
sort of the definition I
such
tried to give. Traditional approaches. Do we need to adapt what we've been doing? And Sheikh, I know you will say, there's no point, and I fully respect there's no point to adapt because it's embedded. But is there just an impact from all of this that needs to be considered? I think that's a sort of think tank discussion. But fortunately, I'm not moderating now. I've handed back to you, Dr. Ahmed, already. So I absolve myself of all responsibility for moderation.
No. You didn't say. I just want to clarify the question.
Be continued.
But it's very important to understand in Islam the door of ijtihad, door of thinking of bringing something to fit Islam is there. It's open always, right? As long as it's not against the basic principles.
Yes.
That we agree that the red line zone that we cannot cross, right? And then also you mentioned about the impact. We have a great principle in Islam, what we call al-ma'alat, means to see the impact and the effects. These all are there in Islamic teachings. So if we talk about ESG or SRI, we have to see the ma'alat, we have to see the impact, we have to see the future. All these scholars, when I say scholars, I'm not one of them, our scholars will take it into consideration, all these Islamic principles or Sharia principles that are exist.
I think if I may add, maybe we're going to start with session 3 now. But if I may add, the question, rather than trying to point at the Sharia scholars should go beyond, I fully agree with Sheikh. At the end of the day, Sharia scholars will definitely try to look at the impact, will try to look at the principle of Sharia, the maqasid of Sharia, and all of them are embedded in, and the ESG principle are embedded in the Sharia. The question is more on the practitioner. Do we practitioner, and I include myself, I don't mind, do we practitioner take into consideration maqasid and Sharia when we go to our Sharia board to get a product or Sukuk being approved? I'm not 100% sure that. We can leave it open as a question, but I'm honestly not 100% sure.
That's a great turnaround. It's a great turnaround, actually.
Actually, this is the real question. And this is the real question, Brother Lillian, because these practitioners sometimes, when they come, when they present it, they have to use some kind of tricky way to convince the scholars. That's the issue here. So this is the right question, whether practitioners are ready to put it well or not.
Stella, I would say you should have started the session with that question.
Very interesting. Okay, thank you very much. Really,
Thank
really
you.
appreciate. So now I will hand over to my honorable brother, Ismail, for closing remarks, inshallah. Thank you very much, Sister Stella, Sister Talaha, and
Thank you.
brother, all of you,
Thank you.
mashallah. I appreciate really.
Thank you.
How about you, brother Haji Ismail, for closing remarks?
Thank you, Sheikh. Appreciate it. I know we're running out of time. I will be quick in giving the closing remarks. Obviously, most of the excellencies have left, but I will still give my greetings to the excellencies, also Mr. Ijlal, CEO IIFM, Sheikh Ahmed, yourself, Head of Compliance. Obviously, cannot miss out esteemed moderators, distinguished panelists, and ladies and gentlemen. Thank you very much for joining us today. What I would like to highlight is basically today's program has been quite informative and absorbing while giving us some points on evolving the Sukuk landscape. IIFM has been producing a Sukuk report for over a decade now, and today's launch is the 11th edition of the Sukuk report. This Sukuk report is not only widely read, but very much sought after by the market as well as the academics, as it details analysis covering global and domestic Sukuk. Today's attendance by the participants in itself is a testament to the interest in IIFM Sukuk reports. For me, it is always interesting to learn how Sukuk market has performed over the previous years and the direction it is moving forward in terms of geography, Sukuk structure, development, and Sukuk issuers as well as investors. The report also opens up to discussion leading to ideas as to how to improve the structures, how to standardize the documentation, and bring about global harmonizations. The Sukuk market has come a long, long way over the last 2 decades and has seen a significant increase as well as diversified Sukuk issues across the global market. Obviously, Sukuk has become an alternative and a diversified source of funding for sovereigns, financial institutions, and for corporates. However, with the increase in oil prices, the oil-producing sovereigns witness a huge budget surplus and now flush with liquidity, while contraction globally coming about due to global fiscal policies may temporarily slow down the sovereign Sukuk issuance in the near future. However, in this respect, Dr. Zamir highlighted Islamic Development Bank is supporting its member countries in developing the Sukuk infrastructure. This may lead the emerging sovereign countries to tap the Sukuk market. Obviously, this initiative will possibly bring more sovereigns to issue the domestic or international Sukuk and thereby keeping the overall global issuance on the upward trajectory. Brother Nick Mohammed discussed the green and sustainable Sukuk strategies being developed in the emerging market. This will increase the SRI ESG Sukuk issuance coming to the market as these sovereigns move towards ESG sustainability. We had a very long discussion on the ESG just now. Obviously, it is an important aspect and an important development that Islamic finance needs to look at. Obviously, Malaysia continues in supporting and developing SRI Sukuk framework by offering incentives to facilitate market adoption. Undoubtedly, this will lay the foundation for other sovereigns to study and taking this initiative forward in the SRI ESG Sukuk issuance. Dr. Bello also highlighted the attention required to develop a framework on climate-related and sustainability. Obviously, IIFM continues in its pursuit on sustainable and climate governance issues. And I think, again, based on our discussion, bringing FIC into the sustainability with Sharia will certainly enhance the overall ESG market generally. Now, just turning quickly onto the Sukuk report. Sukuk issuance not only have a major impact on reducing issuance on the COVID-19. However, the percentage volume of global issuance that's covering domestic as well as international Sukuk issuance to previous year saw an increase, but at a much smaller pace. This was due to slight decline in the domestic issuance. We heard from Brother Ijlal that international Sukuk issuance certainly keeping pace on previous years with sovereign being the major issuers. The Sukuk market is certainly maturing as the market witnessed longer tenor Sukuk issuance of 30 years and 50 years. This is a major development for industry as it develops the profit rate curve over a number of maturities and gives the investors different investment horizon to consider. Ladies and gentlemen, we should take an in-depth analysis produced by IIFM and the comments that we have seen and heard, suggestions provided by the speakers and the panelists in addressing the challenges to taking the Sukuk market to new heights. The fixed income and floating rate asset-based Sukuk is well developed. However, we need to put our thinking cap on and together with the Sharia scholars in developing asset-backed Sukuks, convertible Sukuks, and exchangeable Sukuks. Malaysia pioneered the exchangeable Sukuk well over 15 years back, but no other market has taken this structure forward. It is a pioneering structure that offers excellent economics to the issuer while offering the investor a quasi-capital protection while taking equity exposure. The exchangeable Sukuk has been approved by Sharia scholars, and I'm a big supporter of the exchangeable Sukuk. And I think we need to invite more to look into that. And as far as the corporate Sukuk is concerned, in the past, it has been lackluster. However, with the certainty that we have seen of a jumbo issues like Aramco, I think it bodes well in bringing corporates to the framework again. Secondary Sukuk liquidity is one of the key elements that needs to be addressed. One such possibility is the introduction of Sharia-compliant repo alternative, in addition to the collateralized Murabah, which is already in existence, as this will increase the Sukuk availability in the secondary market while offering investors to leverage or to fund the Sukuk investments. Our panelists are quite positive in the coming years with the re-emergence of the corporate and FI Sukuk. The Asian market, particularly Malaysia and Indonesia, are taking the lead in the sustainable Sukuk issuance. The GCC ESG Sukuks are also successfully entered the market and should now be looking at taking this far forward. The framework for green, SI, and sustainable Sukuk in itself is very much Islamic, and we should take a lead. However, having said that, I think the market needs to develop a standardized framework to categorize acceptability and understanding of the green and SI Sukuk principle. And I think Sister Talal, how she opened up with her ESG circle, I think that's a very, very important one for us to take it forward and introduce to the general market. Not only what makes green or SI, but to have an independent body to periodically review and report full compliance. The cost of such independent review has to be checked so as not to make SRI green Sukuk cost prohibitive. As far as my closing remarks are concerned, finally, IIFM is a market infrastructure body. It is there working and supporting the Islamic finance industry. I request the industry to assist IIFM in every shape or form in order to support and make the industry robust. IIFM is key to membership is key to IIFM. Please become a member of IIFM. That is, if you're not already a member. In addition to participate and contribute in various IIFM standardization, consultative meeting, as well as in the working group forums. As for the IIFM Sukuk Report 11, this is available on the IIFM website for you to download now. Ladies and gentlemen, IIFM has issued a number of standards that are available on the market free of charge. Do load them and do use them in your dealings. Ladies and gentlemen, we've now come to the end of the Sukuk launch webinar. I wish to thank DDCAB, KFH, Bank ABC, and NBK, Labuan FSA for the support, and above all, thank you all for your participation in making this a successful event. Wishing you all a wonderful afternoon and evening, and see you all at the IIFM next webinar or in-person gathering. Thank you very much indeed. Have a lovely day. Assalamu alaikum.
Thank you very much, Honorable my brother Haji Ismail. Now, the word of appreciation from our Honorable CEO, Mr. Ijlal Ahmed Alvi, and close the webinar. Over to you, Mr. Ijlal.
Assalamu alaikum once again. Really thankful, Sheikh. I was not planning to, have final words, but since you invited me, it's really pleasure to be, listening to all the panel and this last one. Really enjoy it because it's a very broad subject in some ways, and we kept it, in a broader sense. And it was, many areas we have to see, which inshallah we look forward to working, and really thankful, to Stella and also, all the panelists on this one and previous one. We hope that, this report, like previous ones, will be again be used by the industry widely, which is the case. And we hope that we will see you soon, inshallah. Before the next book launch, there could be a few other things we should be doing, and we are looking into it, inshallah. So I look forward to, inshallah, welcoming you all back. Of course, the panel members who presented or were there today discussed, they are all, one which we like to keep them. So we will be, inshallah, structuring in a way to benefit from their experience. And we really look forward to everybody's support. Like I said in the beginning also, the main sort of thing which we require as a standard setting organization is the collective efforts and the support, which is the key, which Haji Ismail also mentioned. So I think anything we do really is for the development of the industry. We don't have any other sort of motive in terms of, in our sort of business plan and all. It's all, development of the industry is a key. That's why, IIFM and other standard setting are organized or created. And they are basically there, like mentioned, to play a role in unification efforts. So we know in the national level, there are efforts being made in terms of Sukuk, whether you have Sukuk standards, or you have ruling, or you have different strategies, like it was mentioned by Indonesia about the development of the monetary tool perspective or monetary management perspective. So we basically like to have it on a global level, which is the key, as mentioned earlier, and that is how the industry, with its progress, and inshallah will continue to progress. With those words, I'm really thankful to Dr. Ahmed also, and also IIFM team and everybody, and also the designer of this report who helped us to put together this report, and all the contributors. So we are really thankful to all and all the sponsors. So with that note, I would like to end this session. We have slightly exceeded, and we are thankful to all. Most of you, some of you are still there, quite a few number, and we really are thankful again. Assalamu alaikum wa rahmatullahi wa barakatuhu. Very good evening and afternoon to all, and inshallah see you. Assalamu alaikum.
Assalamu alaikum. Jazakumullahu khairan. Barakallah. See you.
DDCAP Group operates in the global wholesale financial markets, providing intermediary services globally to financial institutions that adhere to Islamic and other responsible codes of financial practice. Ethos AFP was innovated to support the interbank and capital markets trade requirements of Sharia-compliant financial institutions. DDCAP recently announced Ethos Terminal, the latest evolution of Ethos AFP, a multiple award-winning automated trade and post-trade services platform. Ethos Terminal brings additional integration functionality to DDCAP clients via an open market environment. This enables users full discretion in choosing trade counterparts and has been developed in response to user demand and Sharia preferences. DDCAP continues to invest in Ethos AFP, working with partners to deliver cost-effective, fully integrated automated solutions to provide our clients with a dynamic platform for their treasury and capital markets activity that also aligns with their Sharia, sustainability and corporate responsibility requirements. DDCAP aspires to connect the global Islamic financial market responsibly, and the development of Ethos AFP and its functionality is integrated within DDCAP's corporate policy formation, including our Sustainable and Responsible Actions Programme and the review and validation processes and procedures of our esteemed Sharia Supervisory Board.
الوطني يستقبلكم بابتسامة.
الوطني ثقة ما لها حدود.
الوطني يقدم لك أقوى العروض،
أسهل الحلول المصرفية وأسرعها.
الوطني يساهم في التطوير.
الوطني سواعد بحرينية 100%.
الوطني فريق واحد، نجاح واحد.
الوطني معاكم من 35 سنة.
After more than 3 decades as an international business and financial center, Labuan IBFC has established itself as a well-regulated market and has continued to record commendable growth despite of challenging economic conditions. To pave the way forward, the Labuan Financial Services Authority has developed a 5-year strategic roadmap aims for Labuan financial industry to become the next chapter of Asia's growth, underpinned by sustainability, enabled by technology, and fueled by innovation. 5-pronged strategic thrusts have been formulated to focus on emerging growth sectors, including regulatory and supervisory upscaling. Spur market innovations and vibrancy by revitalizing niche and prospective business sectors via digital solutions, including Sharia-compliant businesses. Promote market facilitation and visibility through enhancing the market ecosystem, promoting intra-Labuan market synergies, and reinforcing strategic ties with key stakeholders. Strengthen Labuan IBFC's complementary roles to Malaysia by providing additional financial capacity and strengthening Malaysia's international linkages to Asia. Implement relevant and proportionate regulations by continued upscaling of prudential, regulatory, and legal framework in line with international standard-setting bodies. Undertake preemptive supervision and enforcement by modernizing preemptive supervisory approach through adoption of supervisory technology. Due to the changing market conditions, Labuan FSA also intends to continue growing its internal capabilities as an adaptive and agile organization. The realization of Labuan IBFC Strategic Roadmap 2022 until 2026 is a shared responsibility between the government, Labuan FSA, related agencies, the industry, and other stakeholders. With such combined efforts and synergy in execution of the strategic roadmap, Labuan IBFC will continue to be a sustainable, relevant, and prominent window for intermediating global and intra-Asia business and investment flows. Find out more at labuanfsa.gov.my.